Equity Trading. I'm Tom McKenzie in London, and here are your top stories. Contagion or contained? The crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus. European markets look set to follow Wall Street into the red before crucial US CPI data. The Fed's Evans says it is time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he plans to run for re-election, even as House and Senate races have yet to be decided following Tuesday's midterms. We'll check in on the markets then as investors increasingly start to bet that it's less about the politics and divided government in the US, less about that fiscal impulse and much more about the Fed. As you look at that divided government, the market's pointing lower by 0.6%. Let's switch things over and see how things are pairing out. The first few seconds, of course, the FTSE 100 down by 11 points, off by 0.2%. Of course, the crypto markets and the rout there has got all of our attention. We're breaking that story down for you, getting the details after, of course, Bitcoin slumped to a two-year low yesterday. 15,700 is where it closed. There's been a bit of a bump up, and we'll break that detail down for you just in the next few seconds. But whether or not that links into the broader financial sector, certainly saw the Nasdaq closing lower by 2.5%. Then the focus switches to CPI. The forecasts year-on-year, 7.9%. The FTSE 100 now down by 0.5%. The Spanish IBEX off by 46 points. Let's switch it over and have a look at the cross-asset board then. We look ahead to the futures stateside and also key in to the currency space as well, ahead of that all-important CPI number, what it means for the Federal Reserve as well. You have some, the likes of JP Morgan, saying if it comes in hot, that inflation print, you could see a 6% drop for US stocks. Currently, futures pointing to just very modest gains of 0.1% after the selling of yesterday. Just wanted to reflect what was happening over in Hong Kong. Of course, that has drawn our attention as well. HS Tech currently down 3.4%. Euro dollar back below parity, softness of about 0.1%, and the 10-year benchmark 4.09. Briefly checking in on cryptos then after a bit of a bounce back for the likes of Bitcoin and Ethereum. You're seeing that reflected again. Still, Ethereum up 7.5%. Bitcoin above 16,700, gains of 6% there. But many within this sector are saying the volatility is likely to continue. And don't forget, within the context, there has been a significant sell-off year to date within crypto. Let's get to Bloomberg's managing MLive editor, Mark Cudmore. Then, Mark, you've been looking at the Fed and the question of core inflation, the stickiness or not of that inflation print.
Yes, good morning, Tom. It is the stickiness that I am worried about. I think many people are focused on the idea that we might have seen peak inflation, or at least it's peaking around now. That's pretty much consensus, and I wouldn't argue with that consensus there. Inflation, headline inflation, is likely to be lower very soon. Unfortunately, we're not out of the woods on the inflation problem. In fact, the details are looking much worse, and that's it's likely to stay stickier and more persistent. So this is a breakdown of the core inflation print to the goods component, that white line, which is the real volatile component, and the services component. Now, there are two problems the way this is going. So the goods bit is always much more volatile. We knew the reason for that as well. It was the supply chain issues around COVID. Once we got beyond COVID, we'd ease those supply chains, it would come down. That was the whole theory behind the idea of inflation potentially being transitory. However, it's always more volatile, and it is only 40% of the basket, whereas services makes up about 60% of the basket. And the services one, once it gets going, it is much more persistent because it's about renegotiating contracts, renegotiating rental contracts, changing prices on menus. And that means when it starts rising, it does not come down quickly. quickly. The fact that it is now just above the goods component means that inflation is likely to stay much higher for longer, even if it might be peaking.
All right, higher for longer on what is happening within services. Bloomberg's MLive managing editor, always excellent with the context. Mark Cudmore, thank you very much indeed. Now, cryptocurrencies, as of course we have mentioned, have been on a wild ride this week as the FTX Binance saga unfolded. Bitcoin fell to a 2-year low before paring some of its losses after Binance pulled out from buying FTX. The co-founder says the beleaguered exchange is on the brink of bankruptcy, something that doesn't seem to be a surprise to the co-founder of another exchange, Kraken.
It looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately.
Many people are saying, is this a Lehman moment? Are we looking at 2008?
In real time, that investors are getting hurt.
We would actually withdraw some money or tokens from the exchange if we could right now. But, I'm not too worried. It is an excellent platform.
I don't think there's going to be value there, anything close to what the whole seems to be.
All right, let's bring in Bloomberg's executive editor for Asian markets, Paul Dobson, to get some context here. Paul, is this game over then for FTX?
It's certainly looking pretty precarious for FTX. We have Binance deciding to walk away from the deal. The revelations about how big that hole is that we were just hearing about in the voice clips there, and some of the investors in FTX are already marking down their holdings there to zero. So Sequoia doing that overnight. Telling you that some people are already sort of coming to that conclusion. It's certainly in dire straits, needs some sort of a rescue fast. That's what the boss Sam Bankman-Fried has been saying to investors and stuff. And so looking like a pretty difficult position for them at this moment in time. Yes.
Yeah, SBF pleading with his existing investors for assistance at this point. So there's been a bit of a rebound, Paul, today, as I know you've been watching. How much of that? What does that tell us about how much of the shock has kind of worked its way through these crypto markets?
Yeah, well, I think there's some sort of a recovery today, like you were saying. Really kind of like still very volatile in those markets. We saw a pullback of a similar scale just 2 days ago and then resumed our declines again. And, I think that if you read the commentary, they certainly don't think that this is it, kind of the bottom's already in. If you look at the likes of JP Morgan talking about the risk of margin calls on that higher volatility and the leg lower, which might lead to people needing to either liquidate positions to fund those margin calls or to withdraw from them. Or also this might be where there's some more spillover into the broader equity space, people needing to curb back on other positions in order to put some extra money and collateral up into those crypto trades. So still plenty of scope for further volatility through the rest of this week and over the weekend and into the coming weeks as well.
Okay, Paul Dobson, Bloomberg's executive editor for Asian markets. Let's bring in Bobby Lee. We'll stay on this story then. Founder and CEO of Ballet Global, also a founder of China's first exchange, BTCC, which he later sold, and a board member as well of the Bitcoin Foundation. Bobby, great to get your insights. Is this a Lehman moment for the crypto world?
It's in some ways it is. I mean, it is. FTX has been one of the larger exchanges in the last few years, and to see it implode so quickly, I think it's a surprise to everyone, even to industry insiders. Yes.
Okay, and you'll understand the mechanics of running an exchange, given your history and given your time that you spent building out BTC, that exchange in China. So what would a bankruptcy of FTX, if that's what we get, what would that mean for the broader industry? What are the ripple effects and the cross connections?
Well, if you look at what happened, the reason FTX is being talking about bankruptcy and illiquid is because I think they violated the cardinal sin, which is they probably did not have the full reserves for the customer deposits. So on a typical crypto exchange, customer deposits are either in fiat currency such as US dollars, euros, and also in digital cryptocurrencies such as Bitcoin and Ethereum. And exchanges are not supposed to move that kind of money into other assets, especially illiquid assets or other tokens that have highly volatile values. So when times are good, FTX had a high value, whereas when there's a bank run, so to speak, they realize they don't have enough assets to fulfill customer withdrawals. So all of a sudden, their balance sheet looks really awkward, where the liabilities vastly exceed the assets. And in this case, it was a typical definition of a bankruptcy.
And that is, of course, what is drawing the attention of the Department of Justice, the SEC as well. Do you envision now, Bobby, a major crackdown on this sector from regulators?
So if you notice, all the large exchanges that are international abroad, such as FTX and Binance and several others, they have special entities that operate in the US. And the reason is US has very mature and strict regulation. So their parent entities, such as FTX, the global version, cannot directly operate in the US. So they have a subsidiary called FTX US. And the same goes with Binance. Now, because they have the separation, so technically the US government and the regulators can only regulate the US entities, such as FTX US, and they can't really touch the FTX Global or Binance Global or so on and so forth. So it'll be interesting to see how far reach the US regulators have in terms of the international crypto exchanges.
Okay, well, that's something certainly we will watch, an interesting line as well to follow. Bobby, proponents within this space have long said it's the institutional buy-in to crypto that is providing a foundation. I just wonder if this is a death knell now for those institutional investors who are going to be very cautious now about how much exposure they want to get into which players.
So you have to take a step back. Crypto is still very new and young, okay? This is an industry that's been around, you know, not more than 10, 12 years. Bitcoin itself has been around for coming up 14 years, but for crypto exchanges, you know, barely 10 years. And some of these new ones like FTX, even younger than that. However, Bitcoin itself, as a cryptocurrency concept, it's still rock solid. So the fundamentals of Bitcoin has not changed. So to me, the two talking points for Bitcoin are the fact that it's a limited issuance. Bitcoin only has 21 million units globally forever. There's no more printing of Bitcoin in excess of 21 million. And the second thing is decentralized digital currency, which means that no one, not any person, any company, or any government can affect it, control it, or stop it. So that's the nature of Bitcoin. So the nature of Bitcoin has not changed. What this episode, the so-called Lehman Brothers episode of crypto, is that you have these potentially bad actors, either maybe not intentionally malicious, but they've made some mistakes in the management and in the custody of user assets, causing the company to fail. And we've seen that time and time again. You know, started with MT Gox about 8 years ago in early 2014. And you know, many exchanges have failed over the years. So because this is so new, because the whole industry is unregulated, there's going to be more failures of this magnitude in the coming years and decades until it really becomes mature. I mean, look at compared to the equities market, stock market. I mean, that's a 100-year sort of venture, a 100-year experiment, whereas a crypto would be like a 10-year experiment. So it's quite a big difference there.
Okay, more failures of this magnitude to come in the months and years ahead, potentially. Bobby Lee, really, really great to get your thoughts.
Potentially.
Founder, potentially, there's an important caveat there. Founder and CEO of Ballet Global, former founder as well of China's first exchange, and the author of The Promise of Bitcoin. Bobby, thank you. Coming up, US President Biden says he's seeking re-election in 2024. That's as Republicans limp towards control of the House in the midterm polls. Details ahead. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David,
I think that we actually defy the label consultant, because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
No one covers the world like Bloomberg.
The writing's on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
Welcome back to the Open. Happy Thursday. 14, almost 15 minutes into the European trading day. You're seeing losses across a benchmark of 0.3%. Futures in the US up by just a little over 1/10%. The crypto rout is playing into investor sentiment, and of course looking ahead to that all-important CPI print, the inflation print out of the US. The forecasts are for 7.9% year on year. But the politics as well, central as we continue to work out who is going to take control of Congress. US President Joe Biden has celebrated what he called, quote, a strong night for Democrats in the midterms, with control of Congress still up for grabs. The 79-year-old says he plans to seek re-election in 2024, and he's likely to make an official call early next year.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
Let's get the latest then with Bloomberg's Josh Wingrove. Josh, what is the mood among Democrats then for a Biden run? Has it changed? Most Democrats, or at least there were suggestions that Democrats were pretty anxious about the idea of Biden rerunning. But do the midterm results change that view?
Well, I think these are certainly good results for Democrats as measured by the red wave sort of apocalyptic scenario that some had feared, if not expected. And so, moods are rising. You have had some Democrats say that the president should consider not running again, but it's kind of few and far between. By and large, people defer to him in whatever his decision will be. And of course, looming in the sidelines is Donald Trump, who we expect next week to announce his own bid. Now, Joe Biden ran in the first place in 2020, in large part, if not entirely, because of Trump. So you have to think that Trump running might put bait on the line for him to run again, even at his age. He's already the oldest U.S. president on record. Of course, he sets that record every day he stays in office. Now, with Congress, we're watching these results come in closely. It looks now, it's too close to say basically, but it looks now like Republicans have the inside track on the House, and the Democrats might have the inside track on the Senate. If I was really watching the Senate, I think I'd be looking at Nevada in particular. If they hold that and hold Arizona, where they're leading, Democrats will hold the Senate. That will make Joe Biden's life a lot easier these next couple of years of the first term. You have to think that might weigh on his mind as he sort of makes the yes or no big decision here in the coming months.
Okay, continuing to watch those Senate races then. Bloomberg's Josh Wingrove on the latest with the midterms. Thank you. Joining us now is fund manager and M&G at M&G Investments, Maria Monici. Maria, let's start then with the US midterms. A divided government looks like that is what we're going to be getting, of course, as we await the final results. Is that going to be a catalyst or a headwind for these markets?
Well, I think it's been a very interesting rollout to watch, and what we've seen is actually, not what was anticipated in the sense of having Republicans really getting much more seats than we're actually seeing right now. But the outcome, in a way, it's quite interesting, both in terms of what might happen in 2024 in terms of election, who is going to run for those elections, and what the outcome of these midterm means for who are we actually going to see up for running in 2024. But also for what's going to happen between now and 2024, obviously. We have a much more divided government, which is going to make it much more difficult to bring important policy up for implementation. And I think this is particularly interesting in a phase where we're seeing a very important balance to be set between fiscal and monetary policy. Obviously, we know where monetary policy is heading, and fiscal policy has also a role to play in fighting inflation and in protecting the economy from the worst of a possible recession. But with this type of setup that we're seeing now, it's much more likely that we're going to have very strong fiscal policy brought forward in the next couple of years.
Okay, we might get some clarity in terms of the Federal Reserve's thinking after, of course, Jay Powell said the terminal rate is likely to be higher, but possibly you see the rates of those increases coming off slightly. Charles Evans suggesting that maybe the Fed should take something of a pause, assess where they stand. We'll get clarity later today on the direction with that CPI print, potentially 7.9% is the forecast. JP Morgan saying if you get a hot number, again, we've got 2 months, we've had the number that's beaten the estimates, you could see a 6% downshift for US equities. Does that align with your thinking, the risks around another hot print?
Well, I think inflation remains absolutely one of the core issues, and markets are very attuned to that. Today is going to be a very interesting reading, not only for the surprise element that we might see in it. We've seen, as you said, lots of surprises in the last few readings, but also which sectors are seeing, which areas are seeing the biggest jumps in terms of month-on-month as well as year-on-year inflation. And we have some interesting from the ISM PMI on the manufacturing side, where the pricing element of that came out quite soft in the October reading. On the services side, it was quite a different picture, so prices still expected to be relatively high. And the beige book was also painting quite a mixed picture. So I think, it really remains to be seen what we're going to observe today in terms of surprise to the market, and crucially, how is the market going to respond to that? How much of a surprise is it going to be read into the results we're going to have today?
What is your advice to clients if they want to get exposure to equities? Is now a time, given that valuations have come down in some parts of these markets, to get exposure? Where do you want to get that exposure at this point?
I think the inflation picture is still very complicated. There are many variables to it. But when we look at rates, we've come quite a long way from the beginning of the year, and we have seen quite significant increase on the level of rates. So potentially we're now facing a situation where there might be not a pivot necessarily, but a pause in where rates might go in the next few months as central banks observe what the impact of this increase in rates is. And as we know, there is a delay impact to it, and it's important to make sure that we settle and see what is happening to the economy after this incredible increase in rates that we've seen really across the globe. That could provide some opportunities to re-engage with some more risky markets, which have seen quite a significant sell-off
Where would that take you?
Well, I think overall, there are still risks in the horizon in terms of a macro perspective, but there is a possibility to invest in a more selective way in, for example, quality exposure within the equity market that have seen quite a significant sell-off this year, but that could possibly perform relatively well if we have a slowdown in growth because they are a bit more resilient in that respect. We've also seen a lot more interest on short-term credit, for example, where, again, we had the restoration of value from the beginning of the year. That doesn't mean that risks are completely behind us. They are still important and relevant. If we're facing a recession, you can still expect spreads to widen quite a bit from here, but the starting point is certainly a much better one that we had at the beginning of the year.
Okay, quality and equities, maybe short-term when it comes to credit. Maria, thank you very much indeed for your analysis. Coming to the studio this morning, fund manager at M&G Investments, Maria Manici. Coming up later, an update on the latest from COP27 with our reporter on the ground, Yusuf Gamaladin. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open. 25 minutes into the European trading day. Losses of 0.3% as investors look ahead to the inflation print out of the US, whether we get another hot number, and how it will inform the decisions of the Federal Reserve. Futures in the US pointing to gains of between 0.2% and 0.3%. Let's check in on some of the individual stocks that have drawn our attention today. This is some Bloomberg reporting on what may be happening within the banking sector here in the UK. The Chancellor, Jeremy Hunt, will be reducing the surcharge on the banks from 8% to 3%, according to our reporting. We'll get confirmation of that on November the 17th when he underscores and outlines his fiscal plan. Barclays just gaining 0.1%. We continue to watch, of course, what happens with that fiscal plan. Deutsche Telekom, this was a miss in terms of their third quarter earnings, particularly within sales in Europe. T-Mobile, their stateside, did fairly well. Deutsche Telekom currently down 1.7%. And Haleon, the drug maker, gaining 1%. That was a beat and raising their forecast for the full year. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Allianz has announced a new share buyback program of up to €1 billion after it reported its best third quarter profit on record. The Munich-based insurer said income from property and casualty insurance outweighed weaker results from asset management.
We continue to look at what could be out there, which could be of interest. But at this point in time, we are also very focused on buyback because we believe that buying our stock at this point in time is a very good choice.
Apple has restricted the AirDrop feature on iPhones in China after it was used by protesters to spread images to other iPhone owners. AirDrop allows the quick exchange of files like images, documents, or videos between Apple devices. That's the Bloomberg Business Flash. Tom.
Laura Wright, thank you very much indeed. Okay, coming up, Continental posts better than expected third quarter results. We'll speak to the CFO. This is Bloomberg.
just seemed like I wasn't getting enough blood to my head. I was so dizzy all the time.
More than 200 symptoms are attributed to long COVID, including exhaustion, rapid heart rate, and other bewildering symptoms. It affects 140 million people around the world. Lisa is one of them.
I couldn't work my job as a physician. I couldn't really be a mom. So it was a big change to go from defining yourself as a doctor and a mom to not having either of those define you anymore.
Harvard economist David Cutler puts the cost of long COVID at $3.7 trillion in the US alone.
Long COVID is likely multiple different diseases under the same umbrella. And if we bunch everything together, it's too complex. And so we can't even identify the right patients for right therapy.
We've done a remarkable job in developing vaccines in record time. We need to replicate, learn from that success, and replicate that success in the long COVID research arena.
We've only just begun to scratch the surface in understanding COVID's lasting effects. What's clear already is that the consequences of this viral disease will be vast and enduring unless scientists find ways to mitigate them.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
Welcome back to The Open. We are 30 minutes into the European trading day. Happy Thursday. Here are your top stories. Contagion or contained, the crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus. Europe follows Wall Street into the red ahead of that crucial US CPI data. The Fed's Charles Evans says it is time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he does plan to run for re-election, even as House and Senate races have yet to be decided following Tuesday's midterms. Let's check in on the markets then. The benchmark here lower by 0.2%. A bit of a wait and see, likely until that inflation print comes out. The forecasts are for an increase of 7.9% year on year. In the previous 2 months, the print has come in higher than the forecast. The DAX is currently down 31 points. The FTSE 100 just clinging on to very slim gains, range bound. Let's switch it over, see how things are playing out across sectors. A bit of a defensive tilt this morning. Utilities top of the list, up 0.3%, followed by insurance. At the bottom of the list, and within the mix in the red, is energy. And you see Brent and WTI under a bit of pressure. Real estate is at the bottom of the list, down 1.8%. Retail also down 1.5%. Quickly checking in on Bitcoin then and crypto more broadly, because you are looking at potentially an $8 billion bankruptcy by FTX. Binance, as we've said in the headlines, balking at the idea of bailing out this company. And we heard, of course, that the head of FTX pleaded with investors to help and assist. He admitted he's made some mistakes, but we know regulators and the Department of Justice are scrutinizing what has been going on with FTX. Further volatility within the crypto space is widely expected. Gains of a little under 5% for Bitcoin. Ether currently trading at 1,179. That's a gain of 7% within the context, of course, of that broad sell-off year to date. And Binance coin currently up 5.4%. Let's get back to COP27, though. That continues this week. It is in full steam as, of course, officials meet there and discuss their obligations and implementation of some of those pledges. Bloomberg's Yusuf Gamal is in Egypt for us. Yusuf, what is the update?
Well, Tom, there was a thinking here that we wouldn't see a high-level representation from China. That turned out to be wrong because they did send their climate czar, your John Kerry equivalent, and we also understand that they're both open to having informal talks. John Kerry made a comment on the sidelines of the event here and said, you know what, this is beyond the bilateral issue, so there's always an opportunity to exchange views. The Chinese also gave a press conference which caught a lot of attention, and there's a particular part of that that's interesting because they're laying out an argument here at COP27 that you have to go back to the industrial age to start counting on emissions and factoring that into some of the compensation claims. Of course, that is not being well received across the board. We are expecting a stronger presence from the U.S. in the coming hours. Nancy Pelosi and a delegation is coming over the next few hours, and then by tomorrow, we understand the U.S. president is flying in himself. We could see some of the preparatory works on the way in terms of security across the area. But there's also the bigger question around how the turmoil in global markets is going to ripple through these climate talks. I caught up with the Egyptian finance minister, Mohamed Moaid, and here's what he had to say about their plan.
Financing through the deal is $9 billion, 3 from the IMF, 1 + 1 from the RST, and 5 from MDBs, and this will be over the 4 years of the program, with also expectations that more FDIs and more assets for money will come from different sources. So we are sure about getting this financing gap over the 4 years with the program with IMF will be achieved.
The minister also told me that they are supporting development of mechanisms that allow for these debt for nature swaps, so bonds that are tied to positive outcomes on the climate front. There's a lot of exciting ideas, but it's always a question of whether you can reach a consensus with 200 delegations and how long through the UN bureaucracy and the processes that are aligned with that. That's all going to take. Tom?
Yeah, and to say the least, we have very little time on this issue. Bloomberg's Yusuf Kamaluddin, great. Thank you for the update from Sharm el-Sheikh. Coming up, tensions over Twitter. Biden says Musk should be looked into, while the European Parliament have also expressed concerns. We're going to be live from Brussels. This is Bloomberg.
of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Global inflation and recession, an energy crisis intensified by war, and the aftermath of a pandemic. Next week, world leaders meet in Bali for the G20 summit. And Bloomberg is there, bringing you the news and analysis.
A confluence of economic, climate, and security crises make it a uniquely challenging time.
All of these are pointing towards a big slowdown in trade.
It all starts next week, only on Bloomberg, your global news authority.
Welcome back to the Open. 38 minutes into the European trading day. A bit of a mixed picture across the main indexes. The benchmark, though, is down by 0.1%. The UK and the FTSE 100 just range-bound. US futures pointing higher by between 0.2 and 0.4%, ahead of that important inflation data out later today, with a forecast of 7.9% year-on-year. Now, let's get to one of the big corporate stories of the hour then. Continental has reported better than expected third quarter earnings. That's after the car parts maker secured more orders from auto manufacturers and raised prices to offset surging costs for raw materials. Very pleased to say I am now joined by Continental's CFO, Katja Dürrfeld. Katja, congratulations on these results, a robust set of numbers and a strong order book. My question for you, does that order book hold up for you and the team at Continental as you look out 3 months, 6 months, and a potential recessionary environment?
Yeah, thank you very much, Tom, for the congratulations. I think we've really shown a significant improvement at automotive despite the difficult economic situation. We also have a strong order intake that you've seen, which is already now almost as much as we had last year. So I think that shows that our look into the future is quite bright, and we don't see any severe issues in our order book coming up.
Okay, no severe issues in the order book coming up. I know investors are really interested in what's happening around pricing and margins, so I need to pick your brains on this. You've been able to pass on these input costs. First part of my question, when do you see those input costs coming down, or do you expect that price input to continue to rise?
Okay, I think this is a different situation from sector to sector. If you look at the adjustment in our guidance, you see that we've lowered our input cost expectations for this year from 3.5 billion down to 3.4 billion. This is mainly driven by some changes in the input costs on the tire side overall. So there we do see some effects now moving in or kicking into the pricing, which made us adjust this a little bit.
Okay, and on pricing power, and you have been successful in passing on these prices, and investors are clearly pleased about that this morning, but are you confident you can continue to do that? Is there any sense from your clients, your customers, that they're starting to balk at being able to absorb these higher prices?
So in general, I think you also there need to understand that our business is quite different from sector to sector. On the one hand, we have the strong industrial business, which is mostly coming from the tire side, but also from the quantitative side. There we do have completely different price mechanisms in the market. We do look careful at the markets, how they develop, and adjust prices where we have the chance to do so. So we catch the opportunities that are out there. On the other hand, you have the classic automotive industry, so the OE customers. There we've done a lot this year to create transparency about the impacts that we had due to the cost inflations, and we will continue to address them in case we see further effects hitting us.
Yeah, of course, different parts of the business, different effects. When it comes to supply chains, particularly on chips, and of course this is a topic we've been talking about for over a year now, are you getting any sense that the supply and the constraints around chip supply to the auto sector is starting to ease? What is that picture looking like for you?
Yeah, I already said when we spoke after Q2 that we do see some relief in the market for the second half of this year, and we will continue to see more relief during the course of 2023. Does that mean chip shortage is over? No, it does not, for sure, because there will still be some families that will be especially also tight during the course of next year. But overall, we do see an improvement of the situation year on year.
Okay, overall an improvement. What is the energy impact for the business, looking to 2023, looking to 2024?
If you look at our energy consumption, you can probably say that Continental is around 50% hatched for energy for until the end of 2024. That depends pretty much on the region or on the country if you're able to really hatch the energy costs. Yeah, but it means more or less 50% hedge, 50% spot buys. So we will definitely continue to see some effects there, but we've done our very best to stabilize the situation for us overall.
Okay, and I know executives at Continental have talked about the geopolitical headwinds that exist within this environment. I wanted to get your views on what is a bit of a tension, a friction point between the Europeans and the US. You have the Inflation Reduction Act in the US, subsidies for companies or cars that are made in the US, and now you have the likes of Macron and Scholz potentially discussing similar subsidies for European-made cars. Is that something, that Building Europe plan, is that something that you would support if that comes about?
I think that's pretty much still under negotiation at this point in time, so it's really hard to anticipate what effects there will be to come. We will for sure carefully evaluate the situation overall and make the right steps to improve our overall situation in Continental.
Okay, and the company talked about a plan, you announced a plan around job reductions of about 30,000 back in 2020. How is that plan working out for you? Are there any additional headcount cuts that you and the team are having to consider at this point?
So the program that we announced in 2019 is our structural program 2019-2029. It's a 10 years program, and we are carefully following up on the implementation of all the individual steps. Due to the spin-off of Vitesco, we've reduced the number of headcounts affected, and we don't talk about headcount cuts necessarily, but we talk about headcount transformation, so we're transforming the workplaces. We are approximately around 50% of what we want to achieve in total, but we are following up there. In addition, we carefully look at the development of the economical situation, and we do further adaptations where needed, just like we did for Contitech, for example, where we also announced some adaptations here for the European hose production plants during the course of this year. But we will not expand the original program, but take measures if required.
Okay. Katja Doerfeld, we appreciate your time. Thank you, CFO of Continental, on some pretty solid set of numbers, and investors rewarding that then. The stock currently gaining 3.6%. Coming up, crypto's wild ride, we look into the Binance FTX saga, what it means for the markets. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Welcome back to the Open. We are 47 minutes into the European trading day. Losses across the benchmark of 0.2%. Here in the UK, the FTSE trading at 7,284. That is a drop of 12 points. Let's get back to what's happening with Elon Musk then. The fallout, of course, of over his Twitter takeover does continue. Tensions also rising with the EU. Bloomberg's Maria Tadeo joins us now with an important guest from Brussels on the context. Maria.
Yes, Tom, and we don't even know what Twitter Blue is going to look like, but there's already a lot of questions on this side of the world when it comes to the European Union, and I'm happy to say I'm joined by Sophie in 't Veld. You're a member of the European Parliament, and 2 days ago, and this really caught my eye, you signed a statement in which you say Elon Musk has to come here to Brussels, come to the European Parliament, and explain himself. What do you want to hear from him?
Well, of course, we first want to know, is he indeed going to play by the rules, to respect European laws? And I think we also want to be reassured that Twitter is not going to be, let's say, a threat to democracy, that it's not going to be a platform that serves for attacks on democracy and also attacks on the kind of society that we want to be.
And when he says, don't worry about it, Twitter will just be about radical free speech. Trust me, is that enough for you? I take it no, because you want to see him face to face.
No, but what is radical free speech? Everybody's in favor of free speech, but that doesn't mean, giving free rein to hate speech, incitement to hatred and violence, a platform for disinformation, seeking to influence elections, because we've seen too much of that already in the European Union and also elsewhere. And I think democracy is too precious for that.
And you also say, not just to focus on Elon Musk, of course he's now the focus of attention because his deal is still very active, a lot of big changes, and of course a lot of us are on Twitter. You're on Twitter, I'm on Twitter, so really this is part of a daily conversation. But I wonder, on a bigger picture, however, do you worry about an increase potentially on hate speech, on Russian bots, on Chinese misinformation? I mean, that kind of has been the concern. If the verified blue ticks go away, you just pay for it. Is that something that you worry that we're going to see a massive wave into this?
Well, we can look into the details and see what will and what will not work. But I think that we, on the one hand, we have indeed benefited a great deal from new technologies, from the digital revolution, and I think social media are also a fantastic addition. They are a fantastic tool for democracy, but we have to recognize that there are also downsides. There are also risks and threats, and we shouldn't be naive about that. And it's relatively young as social media. Let's say that it's one generation old. So as mankind and as society, we also have to learn how to fit it into our democratic society.
And do you feel like, being realistic here, that Elon Musk, of course, is one of the richest men in the world, with huge notoriety on the internet, so people love him, hate him. Do you think he's actually going to make the trip and come here to Brussels? Is that actually realistic?
The good thing about democracy is that it doesn't really matter if you're rich or poor.
You don't care.
Everybody has to abide by the law. I would strongly recommend that he appears before the European Parliament. It wouldn't be the first time. We've had Zuckerberg once, but we've also had other CEOs, like, for example...
Mark Zuckerberg was here.
He was here.
It did not go well.
No, I think we've learned from that experience, because already at the time we said he should have appeared before the responsible parliamentary committee, where the people are who actually, know the topic, and that is what we have proposed now, that Musk appears before the Civil Liberties, Justice and Home Affairs Committee and the Industry Committee, so the people who are actually dealing with the relevant legislation. And it wasn't just Zuckerberg. We've had, following the vaccination campaign in the pandemic, we've also had the CEOs of the pharmaceutical.
Recommend, if you want to play in Europe, that maybe it is a good idea to come here. And of course, my final question, because we're running out of time, is have you thought about whether you're going to pay for the blue tick? And it seems a stupid question, but in some ways, it is political. If you pay for it, it means you're on Team Musk. If you don't pay for it, it's almost like, why should I pay you for this? Have you thought about it for your own account? Have you thought about this?
Why should we pay for this? I mean,
so you're not going to pay?
No.
No. Well,
why would I pay Elon Musk for? I mean, he has bought this company in order to make money, so now he needs to make more money and make us pay for something that we have to pay for him to conduct his business. No, I don't think that's right.
Sophie Edvel, a member of the European Parliament for Renew, you are definitely not getting the blue tick, and you're not paying for it. You make it clear I'm not spending a cent on it. Well, thank you so much. We'll hope to see you very soon, and let's see if Elon Musk does indeed make this trip to Brussels. We appreciate your time today. Thank you so much. Tom, let's see. It's a big question. Do you pay for this blue tick or not? I guess we'll have to wait and see.
That was great, Maria. That was fantastic. Well done. Maria today on the ground in Brussels with that important interview. And just a reminder that even as Musk faces additional scrutiny in the US over his takeover of Twitter, there are those potential headwinds and hurdles when it comes to the business in Europe. Let's get to the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. President Biden says the Democrats had a strong night in Tuesday's midterm elections and that the predicted red wave for Republicans didn't happen. The GOP is currently inching toward control of the House, albeit with a narrower margin than many predicted. Democrats, meanwhile, have a path to keeping their Senate majority after they gained Pennsylvania. Control will come down to 3 close races still to be decided.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
Russian troops have been ordered to withdraw from Kherson, the southern Ukrainian city that was the first major urban center seized by Putin. In a televised briefing, Russia's defense minister told the commander of Moscow's forces to pull out of the city and regroup on the other side of the river. That's after Ukraine's troops pressed forward with a counteroffensive. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura Wright, thank you. Okay, let's get back to what's happening in the cryptocurrencies, the linkages with the financial sector. Cryptocurrencies, of course, have been on a wild ride this week as FTX and Binance, that saga unfolded. Bitcoin fell to a 2-year low before pairing some of its losses after Binance pulled out from buying FTX. The beleaguered exchange is on the brink of bankruptcy, the co-founder has warned. Joining us now is Bloomberg's JP Barnett. JP, walk us through then the potential linkages between any bankruptcy of FTX and the broader financial sector. How potentially damaging is this?
Well, I think we're very lucky that this is happening in these times and not 10 or 15 years ago, because I guess the linkages then would have been much bigger. Now, the finance sector is much more regulated. Cryptocurrencies is more of its own world, but still you have linkages into the market. First and foremost, it's not great for risk sentiment. We have a lot of retail traders acting in the crypto market, but also in the stock market, so maybe they have to sell their stocks now, putting more pressure on this area. And then also maybe there are secondary effects. We don't know how many people have lost money and how much. Have they lost their savings? Have they lost debt or money that they put in there on credit cards, whatever? Will there be higher defaults at banks going forward? All this is unknown, so I don't see like a systemic problem here at this point, but it's certainly not great for a market who is still vulnerable, trading in a very difficult year. A story like this is not great.
And JP, just briefly, as we look ahead to the CPI print out of the US, is a hot number still able to shock these markets?
Well, that's a very good question. I would say it's probably more than last month. Last month, it was very interesting that the hot number saw a very quick turnaround, but then the market was near its low. There were lots of technical factors supporting the market. We don't have that now. So if we see a hot print here, and especially a super hot print, I would guess that we see a 3-4% move lower in the S&P 500 in the next couple of days.
The always excellent Bloomberg's JP Barnett, thank you very much indeed. The forecast for 7.9% year-on-year for that CPI print. Futures in the US pointing higher at this point, 0.3%. NASDAQ futures, after NASDAQ closed down 2.5% yesterday. Currently, NASDAQ futures pointing up 0.4%. Here in Europe, the benchmark is down 0.3. That is it for the European market open. Surveillance early edition is up next. We'll continue, of course, to take you through what is happening in these crypto markets, as well as get a sense of what his inflation print could mean for the Federal Reserve and its terminal rate. The December decision, of course, in focus as well. Stay with us. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
I think to be successful in a role like this, it is not only technical knowledge. It is about passion.
They have to love Oreos, right?
They do.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Francine. Here's what's coming up on today's program. Contagion or contained, the crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus. Europe follows Wall Street into the red and then rebounds some ahead of the crucial U.S. CPI data. The Fed's Evans says it's time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he plans to run for re-election even as House and Senate races have yet to be decided following Tuesday's midterms. Well, it is the three C's dominating sentiment. It is centrism after those U.S. elections. It is crypto and it is CPI. Crypto did have the effect of beating down essentially every risk asset yesterday. You see European stocks still following on some of that negative sentiment. Not as bad, though, down just 0.3%. It is a rebound when it comes to U.S. futures. Those are up 0.2%. Rebounding with the wider crypto world. I'll show you that in just a moment. But it is a day of preparing, of positioning for the CPI. Basically, everyone and their mother believes that CPI is going to come in lower than it has in previous months. Yet you are seeing yields move higher. Showed you the 2-year yield there. Dollar somewhat steady. European markets, a little bit of unevenness. FTSE MIB, for example, that is unchanged. FTSE 100, that is down 0.2%. It is a lot of real estate. It is a lot of retail that is down today. To the upside, you have things like autos. You have things like banks. Allianz, one of the best performers in the DAX, so mitigating some of the losses there, but overall slightly lower today. So one thing that is helping is a bounce back in some of these cryptos. Still in the broad scheme of things, over a week, we are still looking at some pretty steep losses for Bitcoin. It was around 20,000 not that long ago. We are below 17,000 now, but still up 6% for Bitcoin. Ether is up 9%. And Binance Coin, which of course Binance was the exchange that was going to step in potentially to help rescue FTX, but now no longer is. That one is up 7%. So perhaps either dip buying or some rearranging, looking for the safety, or just a dead cat bounce. Now, it really has been a wild ride this week for cryptocurrencies. So to put a fine point on it, FTX, Binance saga, that's been unfolding. And as it did, Bitcoin fell to a 2-year low. And as I was just showing you, it paired some of its losses after Binance pulled out from buying FTX. Now, the co-founder says the beleaguered exchange is on the brink of bankruptcy, something that doesn't seem to be a surprise to another co-founder of this one, of the Kraken exchange.
it looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately.
Many people are saying, is this a Lehman moment? Are we looking at 2008?
In real time, that investors are getting hurt.
We would actually withdraw some money or tokens from the exchange if we could right now. But, I'm not too worried. It is an excellent platform.
I don't think there's going to be value there, anything close to what the whole seems to be.
Joining us now is Barclays co-head of Global FX Distribution, Mimi Rushton. Mimi, thank you so much for joining us. Now, we just played some sound there of some various voices speaking to Bloomberg. Among one of them was the CTFC commissioner saying, or posing the question, is this a Lehman moment? Is this a Lehman moment? And if it's something less, is it just a moment that could lead to more contagion?
Thanks so much for having me, Danny, and good morning. I think it's certainly an interesting and a pivotal moment as it relates to crypto, but we've got to remember that this is still a relatively small market when you compare it to something like the world of foreign exchange, which is sort of my wheelhouse. So certainly it's something that market participants are going to be looking at very closely, and the inevitable questions are going to be asked about regulation and what this industry is going to look like going forward. In terms of contagion into foreign exchange markets, we certainly haven't seen it. There's definitely been some deleveraging of assets, and that's normal as investors sort of reassess their positions. But, as I say, it's going to be more something that is looked at, reassessed, as opposed to seeing a broad-based contagion. And I think probably drawing comparisons with Lehman is a little bit stretched at this point.
Mimi, I love it. I know you perhaps you're being accurate here. Your world is more important. FX is so much more giant. I love that as a way of framing it. So let's talk about it. We have CPI today. Is this market potentially set up for a big move if the figures confirm that peak inflation is behind us, just considering how long this market has been on the dollar?
Yeah, so this is really an important sort of few weeks, and I think that this week in particular, if you look at price action, everybody's been grappling with whether this is the peak for the dollar or whether you're going to see a retracement higher again. And the Fed's made it very clear that we are data dependent, and so clearly data points like CPI today are going to be critical. Our expectation is for 0.5% headline and 0.4 on core, but as you say, there is the potential for surprise, and so therefore a market reaction. And what's interesting here is that liquidity is not exactly particularly deep. A couple of reasons for that. Number one is because people have delevered coming into the back end of the year and are keeping positions relatively clean. But the second and perhaps biggest part is because we are trying to determine whether this is the point where we see the pivot of the dollar. It's interesting because, the Fed meeting was the one where everybody was looking for the pivot, and by and large, I think people would say that wasn't a pivot meeting. I'm potentially of the view that, we'll look back at this in a few weeks' time and think that that was the moment that we saw a bit of a turn. The other thing today isn't just the data point. We have a plethora of Fed speakers in the afternoon, and I think that the market will be looking both at the data, but then also how the Fed are responding to the data in the immediate aftermath. So, and definitely two-way risk.
So if we're going to marry those two ideas together, that maybe we'll look at the past meeting, say it was the pivot point, plus speak. We did hear from Kashkari overnight that said, we are a long, I did write this down, it was 3 longs he used, way away from reaching their goals. So that's why any talk of a pivot is entirely premature. Mimi, I do wonder if what we hear from Fed officials will continue to be hawkish, because to some degree, it's about credibility, right? Just backing off of these rate hikes seem to diminish, the guidance more or less they've been giving markets?
It's really interesting because on the one hand, we're sort of waiting for the Fed to pivot and to give us this signal. On the other hand, inflation and certainly employment data has given them absolutely no reason to back away up until this point. So, we're hypercritical of a Fed that actually has started to regain some credibility, to your point, by keeping a pretty firm line and relying on the data. So my point is more, if you do see the turn in the data, you are likely then to see Fed speakers start to adjust their tone. That's effectively what they've told us. It's just that we haven't seen this yet. And there's no guarantees that the CPI data today is going to be the one that moves the needle. And let's not forget that the labor market continues to be incredibly tight, and no signs of that changing either.
Mimi, what's a bigger swing factor, some of the data softening or a potential China reopen?
That's an incredible question. I think that China reopening has the potential to play into global growth, and as a consequence, that's probably a much bigger swing factor in terms of how global markets will react in foreign exchange overall. But the key thing here is that it has to be a credible sign around China reopening. So for us and our FX strategists, they're looking more around signs that there will be some vaccine rollout which would allow for that potential reopening. And to be clear, we would anticipate that markets would reprice that pretty quickly, and we've seen some evidence of that. But the potential for China reopening, the impact that that would have not only domestically but on global growth overall, and particularly in Europe, is really meaningful. And so as a consequence, I think that has the potential to have a big bang effect, far more than potentially the pivot from the Fed. So I think you make an excellent point.
How willing, in speaking to clients, are they to take this bet? Because, as you say, China officials do come out, say we're committed to COVID zero, but then, you have Olaf Scholz in China talking about an mRNA vaccine. How are folks interpreting those cross currents?
And I think that's incredibly difficult for them to navigate right now. The key thing is that nobody wants to miss this trade if and when it comes. And so that's some of the price action that you've seen during the course of the last week or so has been people trying to interpret some of the signals that we're seeing and then adjusting thereafter. But clearly, if the move does come, as we said, it would be meaningful. To go back to this point on liquidity, yesterday, for example, volumes were approximately 56% of what they've been over the last 7 days. That gives you a sense of how liquidity sort of dries out prior to these pre-data events. And so as a consequence, it's really difficult for you to come in and out of these trades. And so investors are, I think, being a little bit more cautious. Positions are much lighter than they have been through the rest of the year. And until you get a very firm signal, I'm not sure that people will commit capital. It's also as a consequence of the fact that we're in November. The idea of trying to commit to a very big tactical trade at this point with the liquidity conditions, I think isn't necessarily as compelling.
Mimi, really fascinating stuff. Really appreciate your time this morning. Barclays co-head of Global FX Distribution, Mimi Rush in there. Enjoy the rest of your day. Now, coming up, crypto's wild ride. We're going to look into the Binance FTX saga and potentially what it means for these wider markets. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Cryptocurrencies have been on a wild ride this week as the FTX Binance saga has unfolded. Bitcoin at one point fell to a two-year low before paring some of those losses. This all came after Binance also pulled out from funding from buying FTX. The FTX co-founder warns that the beleaguered exchange is on the brink of bankruptcy. So how should we be thinking about all of this? Let's bring in Glenn Goodman, crypto consultant at eToro. Glenn, I kind of want to start with the simple thing here that is perhaps the most confusing to me. In a crypto exchange, how does an $8 billion hole appear?
That's the $8 billion question, really, isn't it? The problem at the moment that we have is that there isn't full transparency. And actually, a lot of exchanges, or some of the biggest ones anyway, have come out today and yesterday and said, we need more transparency. Binance has said that they will provide evidence of their reserves. And I get the impression that that evidence might even be in real time, as in you'll be able to see how much money they've got all the time. Crypto.com have also come out. They're the ones who are promoted by Matt Damon. They've come out and said something similar, saying that they're going to publish their reserves as well. But as for FTX, it might be a little too late for all that transparency. We could have done with it 6 months or a year ago.
What is the risk in that there are more FTXs in the world? That, you know, Crypto.com, Binance, yes, they say they're going to publish it, but what is the risk that there are other exchanges with similar issues when it comes to not having the reserves to back up what clients think they have on these exchanges?
It's a big risk, frankly. This is the problem, is that we've always known that a lot of crypto exchanges, being unregulated, were a law unto themselves. Some of them, like Coinbase, for example, are actually listed on New York. Well, that one's listed in America on the New York Stock Exchange. And of course, it has more scrutiny as a result, and it's properly audited and all the rest of it. There isn't exactly the same kind of regulation that there is for stock exchanges, looking at all the transactions and so on. It's not quite as granular as that, the way that it's currently set up, but I wouldn't be surprised if something along those lines came along in the future. But in the meantime, you know, we have this situation where some exchanges are a lot more heavily scrutinized than others. FTX, though, was a real standout in the sense that it was one of the biggest exchanges based in Antigua. Very little scrutiny, and the only comparable one is Binance, the company that obviously tried to buy it and decided not to, got cold feet.
I gotta wonder, okay, even if it's a standout in terms of less scrutiny, it's also a standout in sort of the cult-like following that Sam Bankman-Fried had. I mean, he was held up again and again. We talk about him about being the John Pierpont Morgan of the crypto world. He was the one who bailed out the industry when Luna crashed. Even if other exchanges aren't as vulnerable, what does this erosion of trust, especially in a figure who was seen as very trusted, mean for the industry as a whole?
What really winds me up about all of this is that it's completely antithetical to the decentralized ethos of Bitcoin. The very reason that Bitcoin was invented in the first place was to try and get away from trusting, big centralized corporations, or particularly big centralized billionaires, believing every word they say. The idea was to have a currency that was decentralized, that nobody was in charge of, that is trustless in the sense that you can trust the algorithm, but you don't have to trust any human being. And yet here we are all these years down the line, and the crypto dream has descended into this situation where people were trusting a billionaire. I'll read you out what one major crypto influencer with a load of followers was saying. Said, I can't believe it. We trusted FTX because it seemed safe. Families trusted this exchange with their money. They promoted it across a damn stadium. I can't believe what's happened. It's just hit me. It's like, guy has spent the influencer I'm talking about has spent his entire career basically believing in decentralization and going, yay, decentralization. And now he's like, oh, I can't believe the billionaire wasn't 100% straight with me. I mean, for heaven's sake, get real, everyone.
Glenn, and it's not not even just sort of, the crypto enthusiasts of the world or someone, spending money that they saved up from COVID. I mean, these are some prominent investors who put their money behind this one man. I was looking at a Sequoia blog post. You came with receipts. I got them too, Glenn. They were talking about their first meeting with him over Zoom, and they had people typing, "I love this founder. I'm a 10 out of 10. Again, this was on a Sequoia blog post that they've now had to put a little disclaimer over saying that they've written down their entire holding to zero. So what happens to the crypto industry when you get Sequoia, Tiger Global, Thoma Bravo, these big names now with egg on their face by trusting in FTX?
I think you're going to have a situation in future where people are going to be a little more cautious, famous people I'm talking about, and frankly, that's a very good thing, because during the craziness of last year, when you had the likes of Tom Brady and Gisele Bündchen and Matt Damon and all these others basically being the faces for major crypto exchanges, companies that didn't even exist a few years ago, let's not forget, and these, top people were representing them, it wasn't a healthy situation for the industry as a whole. It had grown too far, too fast. And Sam Bankman-Fried was a perfect example of that. The guy was so green in sort of business sense that he still looked like a student, dressed in his t-shirt with his curly hair and his short shorts, sitting next to Gisele Bündchen. It was a difficult image to assimilate because it was a very strange and kind of cinematic situation, not realistic.
Hey, Glenn, I want to bring in Maddie Greenspan into the conversation, who just is joining us now as well. Maddie Greenspan, of course, Quantum Economics CEO. Maddie, I don't know how much you've been able to hear of mine and Glenn's conversation, but there's a lot of energy going on right now, so you gotta step it up, you gotta meet it. But Glenn and I were just talking about this idea of what does this do to the industry as a whole, with prominent investors who have egg on their face, with a trusted founder who is perhaps no longer a billionaire. What do you think the fallout for the crypto industry will be from this episode?
Yeah, thanks. Good to meet you, Glenn. Also, I was sitting in your seat just 2 years ago. So, yeah, I mean, I think that this is kind of a self-inflicted wound on the crypto industry, but also very necessary to heal itself. The promise of crypto is to have a decentralized and trustless system. And it seems that there was way too much trust being put in the wrong hands. The entire episode started about 2 weeks ago when SBF started meddling and lobbying for regulations that might have benefited him, but been bad for the industry as a whole. And people started calling him out on that. And then, of course, things really blew up when CZ Binance publicly dumped the FTT tokens. I think that the FTT losing its value is not as bad as the massive amounts of withdrawals that happened. People basically voting with their money, saying we don't want to be in FTX, we don't want to be involved in this place anymore. But then also all of the FTT value had, it was leveraged, and there was other things that they bought based on that value. So it was it's just a catastrophic event.
Maddie, and Glenn, I want to ask you about this too. But Maddie, you just made a point that I want to press you on, this idea of lobbying. SBF was a pretty prominent figure in lobbying. He reportedly invested around $400 million in the run-up to the midterms. In general, does the crypto lobby lose some of its bite and then potentially get less favorable regulation going forward because of just this one individual episode?
You know what? What the U.S. regulators decide to do is up to them. Certainly, crypto is a more pristine system. The idea that we can operate with smart contracts doesn't need as much regulatory oversight as traditional banking, where those type of things tend to happen. But exchanges that are centralized, as we can see, certainly do. The United States is falling behind in crypto innovation in a very big way, and that's largely due to regulations and the messed up incentivization structure that politicians have in Washington.
Glenn, what do you think? What do you think the future of regulation looks like? Do you agree with Maddie there?
Yeah, up to a point. I think we do need more regulation. I think the regulation needs to be the right kind of regulation. And this is always the problem with crypto regulation, is that the devil is in the detail. So pretty much the whole industry is in favor of more bringing within the financial fold and no more of this kind of uncertainty about whether a crypto is even a security or not. And, because founders find it very difficult sometimes to know whether they're on safe legal ground. So certainly there are a lot of areas that need clearing up, but obviously we don't want the industry to be squashed flat at the same time. It needs to be sort of nurtured in a healthy way. And that means crafting regulations very, very carefully. The other thing that we could say about regulation, though, I suppose, is that in the aftermath of this, we've already heard Gary Gensler talk. There's going to be, more of a drumbeat for regulation to get it tightened up for exchanges. And that's not necessarily a bad thing to some degree, because the ones that aren't regulated at all, are really dangerous places. And I warned about that in a book that I wrote about crypto trading 3 years ago. I was like, don't keep much of your money on any one unregulated exchange, because you simply can't trust them. You don't know what's going on behind closed doors.
But do you think that Gary Gensler is smarter than you or me or any of the other million people talking about crypto on social media today?
No, I don't. No, I don't think he's.
Who is he to tell us what to do and what not to do? Honestly, this is.
Hey, listen, it is something that is clear that it is a headache for regulators to figure out, right? There's a lot of different voices that I think is just evident by the both of you on its own. Look, let's wrap this up. We got less than a minute to go, so let's see if we can break this up in 30-second answers. We'll do our best here. Maddie, is this the end? Is this final capitulation for Bitcoin?
I believe that this is the final capitulation on this leg of the cycle. If we go by the 4-year cycle, if that plays out again, we're about 357 days left to the halvening. So yes, this could be the bottom.
All right, Glenn, you got literally 30 seconds.
Yeah, I also think that this is the capitulation, but looking at past capitulations in 2018, 2020, when you get the massive volume of trading like we've seen over the past couple of days, it doesn't necessarily mean you're right at the bottom. There could be more days of sort of winding our way downwards until a proper base is formed, which will be the basis for the next bull run whenever that comes. It could be months away, it could be years away, but you can be pretty sure of this. The crypto industry is big and established now. It'll be back.
Thank you both so much. I wish we could literally talk all day. I'm so sorry, Maddie. We are out of time. We're heading into a commercial break. Thank you both so much. Maddie Greenspan there and Glenn Goodman of Quantum Economics and eToro, respectively. Coming up, we're going to get back to the election, the midterms. President Biden, he's seeking re-election in 2024. This is Bloomberg.
Of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
No one covers the world like Bloomberg.
The writing's on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority.
Contagion or contained, the crypto rout pauses, but FTX warns of bankruptcy after Binance bails on a takeover. Sequoia writes down the entire value of its stake in the exchange. Inflation in focus, Europe follows Wall Street into the red ahead of the crucial U.S. CPI data. The Fed's Evans says it's time for the pace of rate hikes to slow. Plus, 2024, here we come. Joe Biden says he plans to run for re-election even as House and Senate races have yet to be decided following Tuesday's midterms. Good morning. Welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Well, it is official. We have the first email from Musk to Twitter staff. And what is in this email? Musk, according to people familiar, has said that there will no longer be remote work. In this email, again, reviewed by Bloomberg News, said that there is no way to sugarcoat the message about the economic outlook and how it will affect an advertising-dependent company, but remote work is over. Let's turn now to the UK. And estate agents say inquiries by potential home buyers dropped for a sixth month. The Royal Institution of Chartered Surveyors Index measuring sentiment from new buyers dropped to a negative 55% in October from a negative 36% in the month before. That matches the low recorded during pandemic lockdowns. I'm pleased to say joining us now is Tarrant Parsons, senior economist at RICS. Tarrant, thanks so much for joining us this morning. So look, it's clear there are cracks in the UK housing market from this survey that you've put out overnight, but how deep are those cracks?
Well, at this stage, our survey data is signaling that the housing market continues to weaken. So we've already seen for a few months now that buyer demand was falling alongside the number of sales being agreed also in decline. But in recent weeks, it does seem that this kind of downward momentum really has kind of gained some further traction. I think a large factor kind of driving that is, of course, that the real jump in mortgage rates that we saw initially after the mini budget. This has calmed to a certain extent, following U-turns on the measures, new prime minister, new chancellor, but still current interest rates are much higher than what they were 3 or 4 months ago. There's also the likelihood that rates still have a little bit further to rise from here. So I think that's the most crucial factor in weighing on housing market activity.
Given mortgage rates have moved higher, is it to a point where the average wage earner is now being priced out of this UK housing market?
I wouldn't say that necessarily. It's going to lead to a period of adjustment. Unfortunately, given that house prices are so high in the UK, when you do purchase with a mortgage, that does require quite a significant sizable kind of borrowing, and any increase in rates is then going to have a significant impact on your monthly repayments. So I'm not sure, obviously some more people are being priced out than before. I think it's just in a period of adjustment right now.
So the market believes that the BOE is going to raise rates to 4.6% next year. What happens if that does play out?
I think 4.6% is kind of what is being priced into the markets right now in terms of the mortgage markets. I think that wouldn't be a kind of worst case scenario. I think mortgage rates are kind of reflecting that move. I know the Bank of England in their latest communication said that their policy rate probably wouldn't, or they don't think it will need to rise as much as financial markets are pricing in. So from 3% currently, maybe something like 4% it is thought more likely. But I think that's largely priced in now. I think the risks, really, the downside risks, if they were to materialize, they would come from more persistent, higher levels of inflation not being brought under control, and policy rates having to move above that level, I feel.
Okay, Terrence, thank you so much for joining us this morning. Terrence Parsons, senior economist at RICS. To the U.S. now, where President Joe Biden has celebrated what he's called a strong night for Democrats in the midterms, with control of Congress still up for grabs. The 79-year-old says he plans to seek re-election in 2024, and he's likely to make an official call early next year.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
Let's get the latest with Bloomberg's Josh Wingrove. Josh, what is the mood among Democrats? I mean, there seems to be this strange irony, I guess, of the expectation was this could be used as a launching pad for Trump's presidential run, and now it seems it's just the launching pad for Biden.
Yeah, I mean, we're sitting here and these results are still being counted, but it's going to be much better for Democrats than some people feared it would be. And when I say some people, I mean Democrats as well. Right now they're still counting the Senate votes. I think Nevada is going to be crucial if they hold on to that and hold Arizona. Democrats will keep the Senate. The House looks like it'll go to the Republicans, but by a much smaller number. This is good news for Joe Biden as compared to historical trends. I mean, presidents normally get sort of clobbered, halfway through their first terms, and so he had some spring in his step in that press conference. The "we will make a decision" that you heard there is a reference, of course, to First Lady Jill Biden. So he's saying in the coming months they're going to make that decision. You haven't had really widespread objection among Democrats to him running again. It's more sort of muted or one-off type of comments, people saying that he should basically do what he wants to do. The question is what people will say behind the scenes, whether that's the First Lady or someone else, but we'll find out in the coming months. But all signs right now point to another campaign by President Biden.
Yeah, Josh, speaking of the coming months, can you kind of walk us through where we go from here? There are obviously some races that we still don't have tied up, that Georgia, for example, moving to a runoff. What does the calendar look like from here?
Well, if Nevada and Arizona come in for the Democrats in the coming week, that kind of settles things. That gets them to 50. Now, there'll still be that Georgia runoff in January, but it won't determine control. And I think Democrats will probably like their chances a little more in a race that doesn't actually swing the chamber. They figure Republicans might not bother to put up as much of a fight, perhaps. But Republicans, of course, see an inside lane to try to win that seat as well. So who's to say? But it doesn't necessarily have to come down to Georgia, is I guess my point. Now, with the House, if it does go to the Republicans, as seems to be the case right now, although we shouldn't rule out the sort of probably slim possibility that Democrats eke something out, then the question is, what might they do before the new Congress starts in January in that so-called lame duck session? There's a few questions hanging over that. One is codifying protections for same-sex marriage. Another is raising that debt ceiling so it can't be used as leverage and other stuff. And then the sort of third broader one is this question of Ukraine aid, which Republicans are starting to balk at providing. So those will be the three buckets that we'll look at in that lame duck session before we go back to what looks like a divided Congress. But again, a better outlook for Democrats than is typically the case in midterms, and that's why you're seeing Joe Biden sort of, wink to the camera and talk about 2024.
Josh, thank you so much. Really appreciate all of your work this morning. Bloomberg's Josh Wingrove there. Coming up on the program, Europe's top renewable firm plans to allocate some $17 billion towards green energy. We got more with the Iberdrola chairman, Ignacio Galan. This is Bloomberg.
CEOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
I think to be successful in a role like this, it is not only technical knowledge. It is about passion.
They have to love Oreos, right?
They do.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Spain's largest utility giant, Iberdrola, says it will focus on growing its electricity network over the next 3 years in a $47 billion push that also seeks to expand green energy sources. We're joined now by Iberdrola chairman, Ignacio Sanchez Galan. Ignacio, thank you so much for joining us. So 47 billion euros, no small chunk of change. A lot of that is going towards clean energy, and much of that is going towards the U.S. You can hear my accent. I have an American bias. What's your American bias? Why the U.S.?
Well, first, because our presence in the United States is very broad. I think we have already the distributions of New York, Connecticut, part of Massachusetts and Maine. Now we have as well a deal agreed with PNM in New Mexico and Texas, and which is mostly related to grid. I think in renewables, we are one of the 3 largest. For many years, we are present in 23 states. And I think that makes that in this moment, the United States is already providing a framework of predictability, stability, and attractiveness. So
does that mean in Europe, in the UK, you don't have that stability, that framework?
Well, I think it's a stability, but I think it's the opportunities which is already given in this moment, United States are great. I think it's traditionally already the ITCs and PTC, the tax credit system. Now this already extending that one for a period of 10 years, with that gave already this predictability. They are already introducing certain incentives for electrifying the economy, either in terms of green hydrogen or either in terms of the networks companies, which is already providing extra funds for expanding our grid or giving extra funds for electrifying and providing a means for electric vehicles. And I think that makes a need for ourselves.
Yeah. I mean, that question might have been a bit leading on my part, because I kind of was getting at this idea of the windfall taxes. You have it in UK. Spain has proposed it. What do you make of it? What does it mean for your investments?
Well, I think we are in a very tough crisis. So, and I think in this crisis, there are someone else which are already obtaining extra benefits, which are not opposed in the people and the companies' money, which I think is that's great. But I think if they are already something as consequence of this one, it's fair, then contribute with that one, which I think I'm not opposed to make a contribution on this windfall profit, if those windfall exist. So I think it's clear that the oil and gas companies, they are already having windfall profits. I think the cost of production of gas, or the cost of production of oil, or the cost of refining the oil is not really increasing as much as the prices are increasing. And I think you see the accounts of these companies, which is already booming. Even the CEOs of certain of those companies are saying the same thing that I'm saying now, is they are ready to contribute as well in that.
Okay.
What has no sense, what is no sense, is to ask for contribution of those companies where they are not really having any excess of profits.
Okay. So that is the difference there, the distinction that you're trying to draw. So given that, do you change your investment outlook in these places?
Well, no, I think you mentioned that we are investing, the first destination is networks. Networks is a regulated activity in the countries. Networks is the base for providing a proper service to the citizen. Network is the base for connecting the renewable, which is desperately needed to diminish the external dependency of the different countries on fossil fuels. And I think that is not already related to that one. Networks by nature is already a predictable thing here in Britain. We are now negotiating the Rio ED2 for the up to 2028. So I think terms, what is we are discussing is terms which are logic, reasonable, and stable. So I think it's more the need of providing, to continue providing this essential service, which is electricity to the citizens. And I think now is required, we are putting our resources for that one.
Right.
The decision is taken more in another side of the thing which are not related with networks, which is related with power generation in general.
The other debate that is unfolding in Europe and specifically the EU, and it does seem that it's caught up sort of the entire energy package debate, is one of a gas price cap and energy price caps. How would you like to see this debate play out?
Well, look, I think all the markets are marginal by nature. So we have already talked too much about the marginality of the electricity prices. We are not talking about the marginality of the gas prices. The fact in Europe, so we have already the TTF, which is the Dutch market, which is mainly managed by the prices of Russian gas. So it has not much to see with the prices which exist already in the case of the south of Europe, the mid gas, which is the price which is more based in liquefied gas, or the price of gas in the Far East, which as well is based on this one. So I think to try to introduce some kind of measure on that one looks already logic. So what, and I think even in these terms, what is being introduced in some European, with the European framework is fine. So I think what Europe is already saying is that prices, gas is responsible of the prices we are paying. So has a logic to put certain kind of cap of the electricity prices related to this one, which has a logic.
Right.
But what has not a logic is each country can do whatever they would like, independently of what is the situation. And I think it's all across Europe. The rules are common rules for everybody, it's fine. But what is not normal is in one country, we are being charged in taxes on this one, another country is already subsidizing.
Do you fear that a lot of the European unity is starting to break down?
Well, really, it is not reinforcing. The singularity is not reinforcing the unity. So I'm already pro-European. All my life I've been defending Europe since I was a young student. And I all things which are is not going on the direction of more unity and more common rules. And I think precisely is not already the right direction that I was dreaming when I was a young student, dreaming to be European.
I'm afraid we're going to have to leave it there on the dreams of young students. Ignacio, thank you so much for joining us this morning. We appreciate it. Iberdrola Chairman Ignacio Sanchez Galan. Now let's get over to the Bloomberg First Word News. With that is Leanne Gerrans. Leanne.
Danny, good morning. President Joe Biden says the Democrats have had a strong night in Tuesday's midterm elections and that the predicted red wave for Republicans didn't happen. The GOP is currently inching towards control of the House, albeit with a narrower margin than was actually predicted. Meanwhile, Democrats have had a path to keeping their Senate majority after they gained Pennsylvania. Control will come down to 3 close races, which are still to be decided. Now, Russian troops have been ordered to withdraw from Kherson, the southern Ukrainian city that was the first major urban center seized by Vladimir Putin. In a televised briefing, Russia's defense ministers told the commander of Moscow's forces to pull out of the city and regroup on the other side of the Dnipro River. This after Ukraine's troops pressed forward with a counter-offensive. Now, Now, Allianz has announced a new share buyback program of up to €1 billion after it reported its best third-quarter profit on record. The Munich-based insurer said income from property and casualty insurance outweighed weaker results from asset management.
We continue to look at what could be out there, which could be of interest, but at this point in time, we are also very focused on buyback because we believe that buying our stock at this point in time is a very good choice.
Apple has restricted the AirDrop feature on iPhones in China after it was used by protesters to spread images to other phone users. AirDrop allows a quick exchange of files like images, documents, and videos between Apple devices. Apple's latest operating system for iPhones sold in China caps the time window for receiving files from non-contacts at 10 minutes. Now, the company says it plans to roll out that change globally. And Parisians and Londoners will face similar chaos trying to get to work today as public transport workers go on strikes over the rising cost of living. Transport operator RATP says travel will be completely interrupted on 5 metro lines out of 16, with disruptions on most other services. Transport for London is advising people to avoid the tube after talks with unions over pay did break down. And that's your Bloomberg Business Flash. Danny, check before you travel. That's what they say.
That's the smart thing to do. But Leanne, I got no idea how I'm getting home today.
Me neither. Maybe we'll have to do a little joint walk.
Looking forward to it. Leanne Garrett's there in London, who I'm sure now is changing into her running shoes so we can go walk out of here hand in hand together. All right, coming up, crypto's wild ride. We're going to look back into the Binance FTX saga and what it means for markets. This is Bloomberg.
Everybody want to be a consultant, and what are all these consultants doing?
Well, David, I think that we actually defy the label consultant because sometimes consultant seems to imply that we only give advice. And when you look at what Accenture does, we're really different than the traditional version of a consultant. We're really about relevance and results, and that's what is driving our business.
What about a consulting project? In my example, I'm the CEO, I have a problem, I call you up, I say, solve my problem or give me a solution.
We don't operate as big companies permanently in crisis mode. And so when you think about like how long does it solve things, a lot of it starts with, the company being willing to set aggressive goals. And so what we are trying to do now is work with our clients to work differently and to work faster.
Global inflation and recession, an energy crisis intensified by war, and the aftermath of a pandemic. Next week, world leaders meet in Bali for the G20 summit. And Bloomberg is there, bringing you the news and analysis.
A confluence of economic, climate, and security crises make it a uniquely challenging time.
All of these are pointing towards a big slowdown in trade.
It all starts next week, only on Bloomberg, your global news authority.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
economics, finance, politics. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London. Cryptocurrencies have been on a wild ride this week as the FTX Binance saga has been unfolding. We saw Bitcoin at one point fall to a 2-year low. It did pare some of its losses. But of course, there's still the question of FTX. Binance has pulled out of buying it. The leaguered exchange is on the brink of bankruptcy, Sam Bankman-Fried warns. Joining us now is Bloomberg's JP Barnett. JP, one of the big points of contention that we've been talking about on the show is contagion effects. Is it contained or is it contagion? Do we have any clearer read on that at this point, nearly 10 a.m. London time on Thursday?
Well, in general, I would say it's a thing of the cryptocurrency world of its own, and we are very lucky that this is happening in these times and not 10 or 15 years ago, because I would bet that some banks would be involved there as well with like loans or something like that. For the moment, it's a cryptocurrency thing, but of course there are secondary effects that probably could like have a ripple effect on the market. We don't know like how many customers have lost money there. Is it savings, or have they put money into the exchange from credit card debt? So will big banks see higher default rates there? So these kinds of secondary effects we can watch out for, and we're not sure if they are coming. And then also, it's not good for risk sentiment right now. I mean, the market is still fragile. We have a difficult year, and a story like this is not helping risk asset management. It's not helping risk sentiment, and it also is a problem for the retail folks who are very active in the cryptocurrency space. So maybe they have to sell some equities here to cover the losses.
But at the same time, we are seeing Bitcoin and basically all the other cryptos bounce back this morning. JP, what do you make of that?
Well, I mean, cryptocurrencies is super hard for me to say what's really going on there, because you always have this kind of, oh, now it's cheaper again, let's buy into it, this kind of gold rush of people who hope to become the next crypto billionaire or millionaire or whatever. So it's very hard to say what the daily moves are doing. This is probably not a thing that is over today, so I would be careful to buy into the market at this point.
Where do you look for in terms of if there is some spillover effect? What does look most vulnerable? About less than a minute here, JP.
Well, I would say like everything that is high risk, because this is also under pressure in general in the market. So if we have a ripple effect here from people trying to sell assets that they still have, I would look out for everything that is like tech-driven, high growth-driven, because these assets are very vulnerable, and I would guess that people would sell them first.
Okay, JP, thank you very much. Bloomberg's JP Barnett there. And yes, with crypto rebounding and Bitcoin, it's up some 6%. You are seeing U.S. futures. They are doing better this morning. But again, the big driver today might be that CPI figure. Markets are expecting some of the inflation, some of the consumer prices to be coming down. Could it surprise to the upside? Or where's the bigger tail? Could it be to the downside, considering this market has been so long the dollar, considering that yields are still pushing higher today? Your 2-year yield is up 4.5 basis points. Well, Bloomberg Surveillance Early Edition continues in the next hour. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
How people feel about the economy and what it actually is doing are two completely separate things.
I think this market is showing that it's discounted most of what expecting.
We've seen this really big shift in sentiment.
Bitcoin's been weak for so long that actually it's really something we're not too worried about, and I guess maybe it's more on the kind of retail side.
We need to have strong global standards to make sure that there are no gaps in the international regulatory framework.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Crypto exchange FTX says it needs up to $8 billion to avoid bankruptcy. JP Morgan says crypto investors face a cascade of margin calls. New data out today looks likely to show inflation in the U.S. moderated only slightly last month. What would that do to the Fed's downshift from steep interest rate hikes? And the battle for control of the U.S. Senate comes down to races in just 3 states, and one of those is headed for next month's runoff. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lines is making her way back from assignment, of course, in Philadelphia. And Matt, in terms of market reaction, we're definitely focused on the crypto story, but from a macro perspective, looking for fallout there, but also focused in on inflation.
Yeah, well, we've seen fallout from the crypto story into things like the S&P 500. Yesterday was off on crypto woes, into things like the 10-year auction. Peter Cheer said it was a horrible auction, and part of that is due to the drop in crypto. So it's definitely causing a little bit of contagion in broader markets. In terms of what we see in Asia, I think this has a lot more to do with a reversal in sentiment around COVID zero policy. We saw some big rallies in Asian markets throughout October because of optimism that China might turn around on its COVID zero policy. Now we're seeing increased lockdowns after more infections spread across places like Beijing and Chongqing. So we have the MSCI Asia Pacific down 1.2%, the Hang Seng down 1.7%. It had been worse in the session, didn't close at its lows, but nonetheless, a loss of almost 2% there. The Nikkei down 1%. This will be interesting to watch. What happens to the Nikkei, what happens to JGBs, what happens to the yen after we get the CPI numbers, because that is something that truly could move assets globally. You can see the yen right now trading at 146.43. Take a look at what's going on in the U.S. We're seeing futures recover a little bit from the down day after Sam Bankman-Fried revealed that FTX could need $4 billion, possibly $8 billion, or it'll have to file for bankruptcy. That'll leave a lot of customers in the hole. Could be leading to a cascade of margin calls, according to J.P. Morgan. The U.S. 10-year yield had been down throughout the early morning, down to about 406 at its lows. Now it's coming back higher, about 1.5 basis points to 410.77. But remember, on a day like today, when we get such an important piece of data out, when I see Mike McKee in the office at 4 o'clock in the morning, I know traders are going to sit on their hands for a while until they can try and digest and translate what's happened. NYMEX crude down 0.33%, 85.53, just so you know. And Bitcoin, which had dropped below $16,000, back up a little bit at 16,652, but still a long way down from the 21,000 that we had seen before this whole FTX explosion happened. Anna, what do you see in Europe?
It's mixed here in Europe. Yes, I wonder what the correlation looks like between how early Mike McKee starts work and the macro significance of the day ahead. Certainly high today when we look ahead to that inflation print out of the US. This is the mixed picture for Europe then, Matt, as we wait for that inflation print and we focus on the fallout yesterday on Wall Street from the crypto story, and that is still rippling through, of course, around the world. Went through the Asia session, as Matt pointed out, came through into the European session, and we're weaker a little bit at the margin on some of these European markets, down by 0.4% over in Paris. Let's have a look at some of the details, some of the sectors and the big names that are moving things around here, and also mention what's going on with Brent crude, because it's actually retreated quite substantially in recent sessions. 92.43, down just 0.2% today, but down substantially in yesterday's session. The US stockpiles number, also the Chinese COVID count, all of that adding up to a difficult picture when it comes to oil demand. Credit Agricole in the French banking space. The banking sector is weak today. That's one of the sectors that we're focused on. That particular stock down by 4.2% for banks. And it wasn't necessarily the top level numbers, which didn't look too bad when you compared them to estimates. Some areas of revenue came short of expectations. But when you look at capital levels, RBC and also Credit Suisse analysts both raising this as a concern. And so that company is down by 4.3%. Centrica, the owner of the British gas supplier of energy here in the UK, up by 7.7% as they talk about returning more money to shareholders. That's interesting timing ahead of a winter that could be difficult, of course, for many, and is no doubt going to attract political attention. Teleperformance, I put this in because it's the biggest faller on the stock 600 today, Matt, listed over in Paris, down by 34%. Other media reports talking about poor treatment of labor over in Colombia. The company, Bloomberg contacting the company, trying to get comment out of the company. No comment just yet, but I put it in here because the size of the move is substantial for a company listed on the stock 600.
Well, and because we're playing to a global audience, I mean, what a truly international story. Thanks very much for that, Anna. Now, cryptocurrencies have been on a wild ride this week as the FTX Binance saga unfolds. Bitcoin fell to a 2-year low before paring some of its losses after Binance pulled out from buying FTX. The real problem, of course, has nothing to do with Binance. It's all about Sam Bankman-Fried, the founder of FTX. He says the beleaguered exchange is on the brink of bankruptcy and could need $4 to $8 billion, basically begging for a bailout. Bloomberg spoke with prominent names in the crypto industry on the fallout.
It looks like FTX might be heading into a bankruptcy process, the likes of which, we've seen frequently recently, unfortunately.
Many people are saying, is this a Lehman moment? Are we looking at 2008?
In real time, that investors are getting hurt.
We would actually withdraw some money or tokens from the exchange if we could right now. But, I'm not too worried. It is an excellent platform.
I don't think there's going to be value there, anything close to what the whole seems to be.
Sonali Basak, our global finance correspondent, intrepid crypto reporter as well, joins us in the office. Unbelievable, right? What do we know about how Sam Bankman-Fried effed up, in his words?
Yeah, he did tell investors that, and he would be extremely grateful, he asked investors, if they would step in and help fill this hole. It's an $8 billion hole in FTX's balance sheet. That is bigger than the size of Robinhood's entire market value. And remember, last year alone, they raised $2 billion in 6 months from investors, from Sequoia, who had marked down the value of its entire stake and had doubled down on its bet. Skybridge was in many levels of series rounds here. The Paul Tudor Jones family was in other rounds as well. There's investors really around the globe that were exposed to this. And so listen, going back to investors is very difficult. He'll need about $4 billion according to our reporting. And whether he can get that or not, he would likely have to file for bankruptcy protection if he can't get that money. There's a lot of question about the ramifications here for FTX and the industry at large. I think Jim Bianco put it well in a call we had yesterday, that there's a real risk here that dozens of firms will fail on the back of this, given that they had their accounts with FTX. So you have consumers both on the institutional side, potential miners, brokerages that may not be able to get their money back, as well as customers who have lost billions of dollars here. So unless the industry came in and bailed them out again, remember, this is why JP Morgan thinks that there's going to be more risk here at play and more margin calls. There's a real risk here that there is nobody to save the day for FTX, meaning others will feel pressure from this.
Yeah, and of course, FTX was the one bailing others out over the summer, and now they're the ones in trouble. And now this is attracting regulatory scrutiny. We already know the DOJ and the SEC are looking at what's happened here, whether there's been mishandling of customer funds then, Shonali. But what about from a broader regulatory perspective? A lot of eyes on this business, on this sector now.
Yeah, from the enforcement perspective, you had mentioned the Securities Exchange Commission, CFTC, also looking at this, the Department of Justice. I think it's really important to track just not only the consumer funds. I think that CZ actually put it interestingly himself from Binance, which is to make sure that when you're using leverage here, not to use your own coins as collateral. We were talking with this with a lot of folks yesterday. The FTT token itself might come under scrutiny here, given how it was used and what happened to it at the end of the day. So the SEC and all of its rulemaking, let's see how quickly they can get things through. We know lawmakers in Congress have been taking a look at this. There might be more push to make rules faster, given how much money has been lost for consumers, billions of dollars this year, and very few actual rules, Anna, have been made.
All right, very interesting. We're going to obviously keep incredibly focused on this story, and the fallout in terms of regulation I think will be fascinating as well. Maybe it's a clue when everybody involved is in the Bahamas or offshore, right? Shonali Basak is going to join us as well. Kaylee Lyons and I for a special 1-hour edition of Bloomberg Crypto. That's today at 1 p.m. in New York, 6 p.m. in London. You don't want to miss it because the contagion to broader markets is evident. It's not just about these little ones and zeros that teenagers are trading back and forth. Now, investors are bracing for the latest U.S. inflation report today. Speaking of contagion, CPI is expected to have slowed only slightly, and that's the result of a survey that's been wrong 11 out of the last 12 months. Joining us now is Bloomberg's Michael McKee. Mike, economists consistently underestimate inflation. Typically, we see big beats here. Do you think we're going to see that as well today?
I think we're probably getting into the territory of maybe not, but I'm not going to promise anything. I don't think we're going to affect the crypto markets too much with CPI, but currencies around the world and, of course, the U.S. bond market could get a big hit if we get a higher than expected number because, of course, it means the Fed has to do more. Here's the survey. As you can see, the headline number is supposed to increase on a month-over-month basis. Food and energy at fault there. The core is supposed to decline a little bit, and that's what the Fed would like to see, especially the month-to-month. A year ago, inflation was still rising, so the year-over-year numbers don't mean as much to the Fed as wanting to see a sequential decline in monthly inflation. Not sure if they'll get it, but there are some signs and portents to follow. One is that apparel should drop because of big inventories at retailers. Used cars, wholesale prices have been down for a long time, so we do expect sooner or later that's going to fall. Some construction supplies may come in a little bit lower. Rent and home prices, though, still rising. That's going to take a while to get into and out of the CPI. The Fed does know that, though. Bloomberg Intelligence says that it may be cresting. This might be close to the top for the rent and home price increases. And then there's a statistical quirk that should bring health insurance down by a lot, and that should keep going. So maybe that's a reason we will start to see inflation on a month-to-month basis fall.
Yeah, remind us of the backstory around shelter. You mentioned home and rent costs there, Mike, and it isn't a very simple system, it seems. The way that the prices people pay for the places they live gets into the CPI data is a bit more complicated. It's 31%, shelter is 31% of the CPI basket, I was reminded yesterday. This has a big impact. If this remains sticky, it has a big impact on that inflation print.
Well, it's going to remain sticky. The way they do it is to ask people who own homes what they think they would pay to rent their house out. And obviously that's not something you think about every day, especially if you owned your house for a while. And then in terms of rents, you don't rent a new apartment every month, so it takes a while for this to get in and out of the data. Now, private firms show that rents have been going down, but that's going to take a while to show up. I might point out to Matt and Anna that you talked about how this could affect global markets. The Prime Minister of Japan met with the Finance Minister of Japan this morning for a briefing on U.S. CPI.
Yeah, obviously it's a very interesting number, important data point for everybody around the globe, and certainly the Japanese are in a very specific position that we'll be following closely. Mike, thanks so much. Michael McKee here covering the inflation story all day long. Let's turn to politics now. Control of the U.S. Senate comes down, as Anna said earlier, to just 3 races where votes are still being counted. Georgia, Arizona, and Nevada, each party needs to win 2 of those states to secure a majority. Jack Fitzpatrick of Bloomberg Government joins us now from Washington with the latest. So, Jack, when will we know?
Well, we're not going to know the control of the Senate for a while because we're headed to a December runoff in Georgia. And unless either party can win Nevada and Arizona and go 2 for 2 there, then it's going to come down to Georgia. So I should say we're not likely to know for a while, but the final votes take a little while in Arizona and Nevada. So it's really a slow trickle to see if either party can get both of those states. And again, if they're split, then we're going to be waiting into December. And it would be very unpredictable to see exactly how the knowledge that the Senate majority comes down to that race plays into the campaigning in Georgia for that. So right now, it's a really extreme game of wait and see in D.C. to figure out who's got the Senate majority. And it really looks like somewhat of a toss-up.
Okay, and we might have to wait weeks then. Let's think about the wait for 2024. President Biden has celebrated what he called a strong night for Democrats during the midterms. He also said he still plans to seek re-election in 2024 and will likely make it official early next year. Let's listen to what he said.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was.
So President Biden's intention is to run again, although the final decision will come after conversations with various interested parties. But we also wait to find out what it is that President Trump wants to announce a little bit later on. In fact, in the coming days, we suspect we know, though.
Well, we have suspected we know for a long time because Trump has been kind of hinting, not subtly, that he was going to announce his decision, seeming to announce that he was going to run for president next week. It's going to be interesting to see if he sticks to that schedule, because this has been a disappointing midterm for Republicans who expected not only to get the House, but potentially get the Senate, and we're hoping for a real wave. Trump was asked about this and acknowledged, he actually posted on Truth Social, there were some disappointing results. This does not reflect well on Trump's place in the party, and a lot of Republicans seem to be looking to Ron DeSantis, who won big, won very easily, and won with some key groups in Florida. So, you know, Trump's decision really looms large over anything Biden does. There seems to be some sense that Biden sort of was made to run against Trump, made to beat Trump in 2020, and it's difficult for Biden to make, I guess, a real announcement regarding 2024 rather than just sort of that almost defensive answer without knowing exactly what Trump is going to do. But again, he back when the expectations were a bit higher for Republicans, Trump seemed quite clear that he was going to make an announcement looking at next week about 2024. We'll have to see if he pushes that off, because there is quite a bit of disappointment with the status quo and with Trump's place in the party following the results that we have seen.
Yeah, and with some of the performance of the people he backed. Jack, thank you very much. Jack Fitzpatrick of Bloomberg Government joining us there from D.C. Coming up on this program, we'll talk to Ed Clissold, Chief U.S. Strategist at Ned Davis Research. We'll keep an eye on crypto and get Ed's thoughts on the read across into other assets, which of course, as Matt says, we've seen already. How far will that run? And talking specifically of crypto, we will get to that conversation with Aaron Kaplan, CEO of Prometheum, an SEC-registered market ecosystem for digital asset securities. What does he think went wrong at FTX? Plus, we're live from the COP27 conference in Egypt once again. White House National Climate Advisor Ali Zaidi joins the team. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance, the early edition. We are simulcast on both Bloomberg Television and Bloomberg Radio. For those of you listening on radio this morning, I will walk you through a really cool chart that I have. Valerie Teitel put this together for us out of London. It just shows the incredible climb at the end of 2019, beginning of 2020 in assets like Bitcoin, but also a Goldman Sachs basket of unprofitable tech companies, and of course the ARK Innovation ETF. This is, skeptics say, what happens when you throw billions and trillions of dollars of money into the system, just flooding it with cash, printing money, and you get this froth in assets. It's all come crashing down, obviously, and Bitcoin, the most recent to join its, I guess, brethren at ARK and the non-profitable tech index. My question is, does this signal a bottom in markets? We're going to ask that question to Ed Clissold right now. He is Chief U.S. Strategist at Ned Davis Research. And Ed, you know, we have seen the S&P come all the way down to 3,600, turn back higher to 3,800. Have we seen, you think, a bottom forming here?
Well, I think, well, first of all, that is a great chart, and people who know Ned Davis Research knows that's a really high compliment if we like your chart.
Yes,
but it's if you look at what happened in 2002 with the dot-com bubble, and then also in 2008, 2009, once things start to break, you can bloody your hands by trying to catch that falling knife, and it really required the Fed to step in and add liquidity before things truly bottomed. And we're talking about whether the Fed is going to be done raising rates, or they're just going to raise rates at a slower pace. So it's probably a little bit too soon to be calling a bottom, would be our view.
Yes, and so good morning to you, Ed. So I suppose the question then, it's a great chart, has a number of assets that have been sent higher by loose money and then come down as money tightens up. And then the read across from those assets in that chart into things that are not in that chart is really interesting to see. How much further downside do you expect to see for stocks in general then?
Yeah, so I do think there's a possibility of a year-end rally, but then as we move into next year, the risk of inflation, of a recession increase. And if you look at the average decline for the S&P 500 in a recessionary bear market, it's around 36%. And so that's a good benchmark to look at. So that would be probably the ultimate low for a broad stock market index. And again, it usually takes some time. The S&P has never bottomed before the start of a recession. So if we believe economists who say we're not in a recession right now, that would mean the low is likely not in place at this point.
What will you look for, Ed, when it comes to the CPI print a little bit later? How do you think the market is going to trade around this? We get used to inflation prints coming in higher than anticipated, but every month we're spooked by it.
Yeah, it is amazing how the market seems to get its hopes up, only to be dashed. But there are some positive things we're likely to see with goods prices coming down because of inventory supply chains getting better. So I think there are some rays of hope. What we really want to look at would be things like the core CPI, the trimmed mean CPI, the median CPIs, and this is really more than just a few items that are rolling over it. That's going to be the key. The Fed's told us that, but I think also the markets have told us that we need to see more than just a few items rolling over. And I do think that the market can look past this owner's equivalent rent issue. That means that part of the CPI is going to be rolling over slower than maybe what's actually going on in the economy, because that's what happened on the upside. It went up slower than was going on in the economy, and the markets reacted negatively to it. So hopefully we can move past that part and see what's really going to be happening with inflation.
You know, Jerome Powell has been saying he wants to see real rates rise into positive territory, and I got another chart here that shows you real rates, or specifically the Fed funds rate minus the core PCE, which is what he has put forward as his proof that he wants to see. We're not even close to there yet, still negative 1.15%. How long do you think it's going to be till we get a real Fed pivot?
Yeah, so I think you're talking about early next year. So the Fed could very well do 50 basis points in December, and then 25 of the first two meetings next year. So that'd be another 100 basis points. That would take us into March. And then if you get a rollover in inflation as well, then you could get positive. So we're talking about Q1 next year, most likely. So it's coming, but we're not there yet.
All right, Ed, thanks so much for joining us. Always a pleasure talking to you, and we appreciate Ned Davis Research any time of the day. Ed Clissold, they are talking to us about what to expect from markets, especially after this incredible crypto explosion that we've seen. Or maybe explosion is too strong a word. I will remind you, Anna, that I bought my first Bitcoin for $800, so it's still worth a heck of a lot more than that.
So you're doing fine.
Well, I mean, I instantly spent it. So let me give you the first word news right now. I want to keep you up to date with everything that's going on around the world. The Pentagon estimates well over 100,000 Russian soldiers have been killed or wounded during the war in Ukraine. The chairman of the Joint Chiefs of Staff, General Mark Milley, also estimates that there have been 40,000 Ukrainian civilian casualties. Milley says that a potential stalemate in fighting over the winter could lead to peace talks. That would be optimistic. Hurricane Nicole came ashore on Florida's east coast early today with a drenching rain and dangerous storm surge. The hurricane was a Category 1 with winds of 75 miles an hour when it made landfall just south of Vero Beach. It's now weakened to a tropical storm, and forecasters warn it could dump up to 8 inches of rain. Coming up live from COP27 in Sharm el-Sheikh, Egypt, White House National Climate Advisor Ali Zaidi. This is Bloomberg.
The standard way venture firms work is you commit capital, let's say over a 5-year investment period, something like that.
Yeah, exactly. Right.
And then the fund is typically lasts maybe 10 years or so.
15. Well, these days longer. So often 15. Often the tail extends out to 20 years because these companies take a long time to develop.
And somebody that invests in a venture fund today should be trying to get rates of return of 20%, would you say, or more?
You know, top-end venture is sort of 3x net of fees. You know, ideally you're hoping for more than that. You're hoping for 5x or more. You know, you're illiquid the entire time, right? So you would hope to get paid for the liquidity.
And today,
so yeah, maybe 20 to 40% if things go well is sort of baseline.
Let's take another subject. Let's suppose somebody says, I don't want to invest in Andreessen Horowitz. I want to be Mark Andreessen. How does somebody become a venture capitalist? What are the skill sets for good venture capitalists? There's a high degree of intelligence, hard work, a lot of luck, dress the right part, don't wear a tie. What are the things that make one a good venture capitalist?
So the highly successful VCs historically are very idiosyncratic. You have people from very different backgrounds. Mike Morris is a former newspaper reporter. John Doerr is a former chip salesman. You've got people with very different. Jim Breyer has more of this kind of blue chip investment background. You have people with very different backgrounds and experiences. And so I think it's some set of skills and some set of knowledge, and then there seems to be a taste component to it that's really hard to measure and really hard to predict.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Crypto exchange FTX says it needs up to $8 billion to avoid bankruptcy. JP Morgan says crypto investors face a cascade of margin calls. New data out today looks likely to show inflation in the US moderated only slightly last month. What would that do to the Fed's downshift from steep interest rate hikes? And the battle for control of the U.S. Senate comes down to races in just 3 states, and one of those is headed for a runoff next month. I'm Anna Edwards in London with Matt Miller in New York. Kaylee Lyons is making her way back from assignment in Philadelphia. And Matt, European equity markets, well, they're not doing all that much, really. Waiting for that U.S. inflation print later, waiting for the next news lines on the crypto saga as well.
Yeah, I think we're waiting for, we're definitely waiting for CPI. That's going to be a huge input to what the Fed does going forward, and obviously that means the market cares about it deeply. We do have futures up right now about 0.1%, so the truth is not moving a heck of a lot. But remember, yesterday we were down more than 2% on the S&P 500, largely because of concern surrounding Sam Bankman-Fried's FTX implosion and the drop in Bitcoin. Right now you can see at the bottom of the screen, Bitcoin actually rising almost 5%, but it had come down to below 16,000, and a week ago it was trading for 21. So it's been a long way down for Bitcoin over a very short period of time. That kind of volatility used to be normal in this space, but we'd come to rely on Bitcoin as just holding at 20,000 for the last few months. In terms of what we're looking at in U.S. yields, we were down to 406 earlier this morning. Now we're back up to 411.15 right now, climbing about 2 basis points, but clearly another market where traders are going to likely sit on their hands until they see that the CPI print. I will also point out that Peter Cheer yesterday said he was very disappointed in the 10-year auction, and a lot of that maybe had to do with the concern around crypto. So it's not just affecting the tokens, it's actually affecting a contagion into broader markets. And then NYMEX crude. You pointed out that we've seen crude come down. You were showing Brent earlier, Anna. Here's the New York West Texas Intermediate contract to 85.14 a barrel. So we really haven't seen a big uptick in that. But of course, it's the core number that the Fed cares about in terms of inflation, and this is considered a transitory price. What do you see in Europe?
Yeah, interesting to see the speed with which those oil prices are coming down. Still at elevated levels, of course. I've got Brent crude in here still, Matt, at $92, but it is coming down pretty fast, as if the Chinese narrative around opening, no, not reopening, that is sticking to energy prices, perhaps more than it's stuck to other assets. Other assets, though, a little range-bound this morning here in Europe, down 0.2% on the stock 600, waiting for clarity around the inflation picture in the United States. Will we see that little bit of moderation? What will that do to the Fed's trajectory? In terms of some stock specifics, we have Centrica up by 8.2%. The owner of British Gas, which supplies energy, of course, to many UK homes, they are talking about returning cash to shareholders, which no doubt will attract political attention. Teleperformance, a stock listed in Paris, it's the biggest faller on the stock 600 here in Europe. Very specific story around this company, but other media reports talking about poor treatment of workers over in Central America, in South America, and as a result, the stock under pressure. Bloomberg in touch with the company trying to get comment, of course. Matt.
All right, let's get back to the COP27 summit in Sharm el-Sheikh. UN climate talks there are well underway. And Bloomberg's Youssef Gamel Eldin joins us with a special guest for the latest. Youssef?
Matt, what I will say is that we're getting more and more high-level representation from the United States. I mean, they're taking over the place, and we managed to connect with one of the key people, and that is Ali Zaidi. He's the U.S. Chief Climate Advisor, White House Climate Advisor. Thank you very much for joining us. You guys are taking over this space. It's unbelievable. Anyway, you've got a busy agenda, a lot of meetings lined up. Let's first get a bit of a sense of how what looked like, some of the initial midterm results. In the event that we get a Republican House, how does that affect the Inflation Reduction Act and the billions of dollars of climate spending that are tied to that?
Well, one, I think we've seen in the way the American people turned out a validation of the president's economic theory that investing in clean energy is good for our consumers, it's good for manufacturing, it's good for our economy. And number two, a lot of what the president's put together over the last several years through the bipartisan infrastructure law, which was heavily focused on clean energy and climate, and then the Inflation Reduction Act, has enjoyed bipartisan support, whether it's in Congress or in governor's offices or around the country, with mayors from both parties stepping up to take advantage of the irresistible economics of clean energy. So, I think our the momentum here is secular. It's going in one direction. It's been pretty clear that that's where we're headed. And I think actually the pace is increasing because more and more businesses, more and more workers are seeing the upside.
In terms of some of the climate goals that the U.S. has set out, the plan is to reduce emissions by, 50 to 52% by the end of the decade. The analysts we've spoken to suggest that's not very realistic. We're looking more at 40%. What needs to be done to kind of ramp up that target and make it more realistic? I mean, what else needs to be added to the effort?
So, look, where we started was around 20%. We've already, in the first 2 years of the Biden administration, racked up enough policy that gets us in that 40% range that you talked about, independent analysts showing the pathway to. We've got a bunch of additional policy yet to do, and I think what we're seeing is a flood of private capital also come in alongside the public investments to help us meet these goals. I'm really bullish on the power of the transformation in the industrial sector, where I think a lot of folks are under-focused and under-invested. Things like cleaner steel, cleaner cement, and aluminum. There are hundreds of millions of metric tons to be had there. We're focused on that. And I think the power sector transformation is going to happen at a faster clip than people have anticipated.
What about the visit of the U.S. president expected in the next few hours? Is he going to unveil a major new announcement? Could you give us a bit of a preview of what to expect?
I think the president will talk about how much of a priority climate and clean energy has been for him from day one, how he's delivered on the goals and commitments he's made consistently and unambiguously from day one, and the work that we have yet to do, including ways that we can increase ambition, and I'll leave it to him to talk about how we do that.
I think one of the contentious issues at this summit has been around what wealthy developed countries need to do in terms of compensating those that are less well off from times prior. And I mean all the way prior, like the industrial age, as the Chinese delegation made clear. To what extent do you agree that there is a level of responsibility that the U.S. does carry, and that there needs to be some form of leveling out?
Well, one of the most important things is that major economies have to make major emissions reductions, right? If we're going to get to 1.5 degrees, anywhere near that, the United States and other countries need to step up, and that's exactly what we're doing. But to your point on resilience and adaptation, the president launched and has leaned into a Prepare initiative that's helping 500 million people across the world adapt. He's deposited the first installment of funding into the Adaptation Fund, $100 million. Our Development Finance Corporation's done over $2 billion of deals on clean energy just this past year. So I think we are keyed into this conversation. It's an important one to be had here at Sharm el-Sheikh, and it's about moving together in the direction of a cleaner, more sustainable, more resilient economy.
So have you spoken at all to your Chinese counterparts? I mean, I understand from John Kerry that there have been some talks, but it's not clear to me what the extent of those talks were. Have you met anybody from your Chinese counterparts?
You know, I've been here on the ground for less than 48 hours. I have not had conversations with folks in the Chinese delegation. Have talked to folks all around the world and in the private sector as well. And what we're hearing back is just a sense that this is a critical moment. We can't miss this opportunity. We got to figure out how to go fast together.
I need your help with something, Ali, because I'm trying to figure out why all this major environmental regulation, right? Rules to clamp down on methane emissions, pollution from auto tailpipes, all these great ideas, but they're stuck somewhere in the system. They need to be finalized by the EPA, and that's not happening. Where's the holdup?
Yeah, I don't think that's true. Number one, we have finalized tailpipe emission standards, and we're working on the next round, but we've finalized the most robust standards that we've ever seen in the United States. On methane emissions, in the Obama administration, we looked at new sources of oil and gas. This administration's actually put a proposal out for existing sources of oil and gas. We finalized regulations to tackle hydrofluorocarbons in line with the Kigali Amendment. And we've done all of that operating from a deficit 2 years ago, where we had to deal with a number of rollbacks and reversals and a real hollowing out of the administrative state in the United States. So we're going really fast, and if the question is, are we going to go faster and faster? The answer is absolutely yes. But I don't think there's a stone that's being left unturned.
Ali, great catching up. Thank you for making time. That is Ali Zaidi. He's the White House National Climate Advisor. As I mentioned earlier, we're expecting a congressional delegation here from the United States and the U.S. President in the next few hours. So stay tuned to this space. Matt, Anna?
Okay. Yusuf, thanks very much. Yusuf Kamaluddin in Sharm el-Sheikh with the U.S. government perspective. Coming up on this program, we'll get back to the crypto story, back to the crypto fallout with Aaron Kaplan, CEO of Prometheum, an SEC-registered market ecosystem for digital asset securities. What does he think went wrong at FTX and what happens next? This is Bloomberg.
In the past 2 decades, China has built large infrastructure projects in almost every country in Africa.
African governments themselves said, we are tired of aid and charity. We want to do trade. We want to be treated like partners. The Chinese came along and said, great, we don't do aid and charity. We want to do business with you.
Global Gateway will mobilize 300 billion euros till 2027.
Now the US and Europe are answering back with their own infrastructure initiatives to counter China, but African experts are skeptical.
China has been that guy around the corner with, a bouquet of flowers to Africa, the US, Europe and the UK have time and time again said, be careful of the flowers you see out of the window, they have thorns on them.
one covers the world like
The
Bloomberg.
writing's on the wall for the Bank of England. Just Stop Oil has spray painted the front door.
Recession in Europe, UK, and possibly the US.
Brazilians are out in full force celebrating the election victory of former President Lula da Silva.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Lack of disclosure, opacity. We've seen the use of other people's money and trading ahead and using other people's money, but we've also seen the use of leverage.
We need to have strong global standards to make sure that there are no gaps in the international regulatory framework where you can see risks like this spread and you can have the risk of contagion or even systemic risk spreading to the broader financial system. I don't think we're at that point.
A couple of U.S. regulators there weighing in on the chaos in the crypto industry, sparked this time by the warning from FTX of a potential bankruptcy, and really the founder begging for a bailout of $4 to $8 billion. Joining us now is Aaron Kaplan, founder and co-CEO of Prometheum, which is a platform that links securities, traditional financial securities, to the crypto world. Aaron, thanks so much for joining us. Let me ask you first what you think happened with Sam Bankman-Fried and FTX, because he was seen as a white knight in the community as other businesses failed, compared often to JP Morgan and talked about as, you know, a huge billionaire with massive ideas about saving the world. Where did he go wrong?
I think what was wrong was the lack of institutional controls, which led to excessive risk being taken and resulted in likely the retail customer being harmed. I think that a lot of the time people have said that regulations are necessary, that decentralization is incongruent with regulation, but what we're seeing is that in order for an industry to mature, there needs to be the proper regulatory frameworks that allow customers to be protected, that allow customer funds and funds to be properly segregated, and that ensure that there is investor confidence in the industry.
So what, needs to happen here first and foremost? I mean, my thought is rules about how you deal with customer capital and on transparency. We didn't have a lot of that in this case. What would you like to see?
I think that the best way to mitigate these type of actions is to apply the existing securities rules and regulations, which protect investors, ensure fair and orderly markets, and ensure that customer funds and assets are protected. What that requires is regulating intermediaries in the digital asset space, meaning virtual currency exchanges and custodians, as broker-dealers, and requiring them to register under the securities laws, which will provide the institutional controls, the reporting mechanisms, and the regulatory oversight needed to prevent future debacles.
So you think, good morning to you, Aaron. So you think we don't need any new rules, we just need better application, or you think we need to take existing rules and apply them to these asset classes?
Again, I think that the existing federal securities laws are the best framework through which to regulate almost all the processes in the digital asset space, particularly intermediaries. If you've listened to what Chairman Gensler has said historically, he said that virtual currency exchanges and intermediaries should register under the securities rules, and the SEC has provided frameworks for the trading and custody of digital asset securities in the three-step and special purpose broker-dealer releases, and operating within those frameworks is the best path, in my opinion, to achieving compliance.
When we think about contagion here, and we've already seen it from one coin to another, we've seen it from one part of the crypto sphere to others, and then we've seen it into other assets, certainly in terms of risk sentiment, Aaron. What is the method by which we see that contagion take place, and therefore what is still left to come? How much downside is there still for various assets as a result of this?
I would say in the immediate term, there's significant risk as we will see a loss of investor confidence, potentially significant harm to retail investors in the event of an FTX bankruptcy, which is a major issue, and I think something that will result in significantly enhanced government oversight. And we'll also continue to see the extreme volatility that we've seen over the past few days. Beyond that, we'll also likely see greater government scrutiny on the enforcement side, and really, hopefully, the swift application and more stringent regulatory frameworks, such as the federal securities laws. But one point, and I think this is important, this enhanced attention that from lawmakers and regulators is going to be a good thing, as it will result in the regulatory clarity that many argue is needed to end the crypto winter and bring about the crypto spring.
Aaron, you, in terms of your own platform, somewhere on the website, you say that Prometheum is an alternative trading platform that allows customers to trade digital crypto assets in a securities market. You're using that word specifically, I think, because you're SEC regulated. You also have been approved by FINRA as an alternative trading platform. What did you have to do to get that? Does that ensure the safety of your clients, and why aren't other people doing it?
So Prometheum ATS is registered under the securities laws as an ATS that allows for public trading of digital asset securities. I think the reason that a lot of people sort of were deterred from that path is because it was more difficult to operate in a regulatory gray zone or to operate under the money transmitter laws. It's a much lower burden, in my opinion, than operating under the federal securities laws, which are the most comprehensive framework to protect investors, ensure fair and orderly markets, and protect and segregate customers' funds and assets. It's harder to implement. So I think that often the people who argue that there's a need for new laws are the people who are best served by the current lack of regulatory clarity. And their argument is really that the existing laws shouldn't apply because we didn't operate in that sense.
Okay, yeah, tell me a bit more about that, because you talked about how this is going to trigger more government oversight. So no doubt, Aaron, people like you and other players in the crypto space will be asked to go and speak to lawmakers, help them understand the challenges here, help the sector work better. But we saw Sam Bankman-Fried doing a lot of that. No doubt trust has broken down here a little bit between those who operate in the crypto space and lawmakers. How is that trust going to be rebuilt?
To my reading, FTX and SBF were one of the largest contributors to the concept that digital assets should be regulated by the CFTC. I'm a securities attorney by trade. If you understand securities laws, if you follow the Howey test and its progeny, it's pretty clear on its face that the overwhelming majority of digital assets, arguably every digital asset beside for Bitcoin, is a security and should be regulated as such. And people who have argued for anything to the contrary often are serving their own purpose there. So I think this will clear the way for the proper application of the securities laws to the digital asset space. And what we saw this week with the library decision, the summary judgment the SEC received in their favor, is that the argument that tokens aren't securities because you put a disclaimer or because you say this is an investment is spurious at best. And what we're seeing now, and I think this will impact going forward what happens with Ripple, is the clear application of the securities laws in a proper way and to the digital asset industry.
Well, maybe that's what it's going to take to rebuild trust in the sector. Aaron, great to get your thoughts. Thanks so much for joining us. Aaron Kaplan there is the founder and co-CEO of Prometheum, talking to us about what has happened and what needs to be done. Be sure to join Kaylee Lyons and myself. Shanali Bassick will be with us as well for a special 1-hour edition of Bloomberg Crypto this afternoon. Our guests include Democratic Congressman Stephen Lynch, chairman of the Task Force on Financial Technology, and the Republican SEC Commissioner Hester Pierce. So a lot about regulation today, maybe a little bit too late for some. That's today at 1 p.m. New York time, 6 p.m. in London. We're really looking forward to it, so we hope you join us. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Now let's take a look at what lies ahead today. The UN publishes its twice-yearly food outlook report against a backdrop of supply disruptions caused by the war in Ukraine. Also today, the counting in the midterms continues with many crucial races yet to be determined. Control of Congress hangs then in the balance. And fresh from hailing Democrats' performance in the elections, President Biden heads to the UN climate talks at COP27 taking place in Egypt. Plus, a number of Fed officials are due to speak today with Waller, Harker, Logan, Daly, Mester and George, seems like all of them, due to give their thoughts on monetary policy at events across the country. And top of their watch list, US CPI, that reading due at 8:30 a.m. Eastern time. And Matt, we need to focus on that.
Yeah, absolutely. Cannot wait to see that CPI print. As I said earlier, 11 out of the last 12 months, economists' survey has been too low, and we've seen that number beat. So it'll be interesting to see what happens today. Let's get more insight from Valerie Titel. She joins us now, Bloomberg markets reporter, with a look at what to expect. Valerie, what are we wanting to watch?
Look, it's all about the core CPI print today. It's expected, the year-on-year numbers are expected to tip down from 6.6 to 6.5. But I'd argue, who cares about when it peaks? It's all really about how persistent it will be. And to show this, I've got a chart here of the U.S. The goods versus services inflation. And a lot of the narrative this year has been about the handoff from goods into services. We know that 2021 was all about the supply bottlenecks of COVID causing goods services to spike. But 2022 showed us it really wasn't just about the bottlenecks. The U.S. had an excess demand issue, and this inflation fled into services. The question here, Powell was upset about how the extent to which goods dropped. And maybe I'm jumping to conclusions, but I think he's going to be disappointed about how quickly services will fall.
Okay, we'll watch that. Valerie Titel on the markets. Thank you. That's it for Early Edition. Surveillance is next. This is Bloomberg.
what do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view. And I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
You look at the midterms, the market generally does better after that. I just don't think that this time that's going to carry much weight.
It really doesn't change the near-term picture, and the near-term picture and the near-term risk is about Fed, it's about inflation.
Inflation has already peaked. I think it is going to gradually fall.
We are still racing ahead on all cylinders with an incredibly strong jobs market.
Markets have not adjusted to this new Fed.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is CPI Thursday, live from New York City. For our audience worldwide, good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures just about positive, TK. The data a couple of hours away.
I think every voice we had there in our opening said the election doesn't matter. Let's move on. We're not going to move on. Anne-Marie Horton will join us here with some of the follow-up of the midterm. But, John, you are right. It is CPI Thursday. It matters, and it really matters to get to the next CPI and then to that
connection lost. To get you through the rest of the year, I was just going through the dates, Tom. December 2nd for payrolls, December 13th for the next CPI, and then the Federal Reserve December 14th.
That's
year
amazing.
over.
I'm
After
off
that,
all 3 days.
if you just take every single day off that those data points land on, Tom, that's basically it. Year over.
It's year over, but it's important here, and we do it with a data screen. We'll get to the data check here, but it really shows the important tension that we've got today. We'll start strong with Michael Pond, expert on how inflation links into the fixed income market. How does it link into the equity market? I don't know.
Got to talk about crypto too. So at 8:30 Eastern time, I think you have one screen up,
our
looking at the
annual-
CPI to drop, and then Bramo, you have another screen up, just looking at what crypto's doing, looking at what's happening to Bitcoin over the last couple of days.
Really? I could tell that you're being somewhat sarcastic and that you're looking for me to basically
What was
make a fool of
disingenuous about
myself.
any of that?
Well, no, but look.
Well, where do you want to start, John?
We don't normally cover the crypto markets. In as much as we are not covering crypto, the bleed through to the rest of markets is significant. And what you're seeing right now is a crypto meltdown that's really taking all of the speculative money, or a lot of it, out of an asset class that really grew up in the zero rate industry. So in this zero rate environment, how much are we seeing that really the triggers breaking of some of the areas that were really fostered by the environment that we've been in over the past
Shelley
decade?
Bassick, John, to join, and I'm going to talk to her about Sequoia. They take a mark down to zero on whatever this latest blow up is. And I'm fascinated of how someone as venerable as Sequoia is caught up in this. If you're James Dimon this morning and you're looking at BitDog down 75% from the glow, what do you do?
I think you're saying, can we replay the clips that were from a couple of years ago when I said, I told you so? Isn't that the Jamie Dimon quote right now?
You know, we don't need the hate mail this morning, folks, but I think it's like
You're
the way
preempting the hate
Washington.
mail.
No, but like
We need it.
Washington agrees on China, the three of us agree on BitDog. We're all suspect.
You've lost just as much money in Facebook over the last 12 months.
I didn't own that dog either.
To be fair.
Face dog, we called that.
We were pushing 70K on Bitcoin 12 months ago.
Yes.
And this morning it's 16. It's brutal. It's going to be a lot of pain out there.
Trading range at 10,000. I have no idea. To me, there's no technical chart. This is an out-of-body thing.
An out-of-body experience again.
Yeah.
Like the midterms for you.
I'm going to send Matt Miller
Sure.
a bouquet of tulips. I think that'll be appropriate.
I'm going to whip through the price
Please do
action. Equity futures on the S&P up 1/4%, a bouquet of tulips. Futures up 1/4%. Yields unchanged, just north of 4%. Let's call it 4.1% on a 10-year. Euro dollar 99.44. We're negative 0.7%. Crude 84.89, Tom, back in the 80s. We're down by 1% again this morning.
Yeah.
That's been a whole lot softer over the last week.
Playing off of the China story, which we don't have much information on this morning, I would say, but I would go to the Bloomberg terminal, John, and say the 2-year yield in the United States is my proxy for what we see at 8:30. And it's just an easy number to grab onto. It's not the benchmark 10-year, the 30-year playing off of a mortgage and all that, but at 4.61%, that's my barometer for what we see after that inflation report.
The data, Bramo, 2 hours away.
Yeah, let's get into it. 8:30 a.m. U.S. October CPI. We also do get jobless claims, but really that's going to take a major backseat. How much do we see a slowdown, and how significant is it? Are we really going to be looking at the headline number? The expectation is for it to go below the 8 handle to 7.9% year over year. How much are we looking for core CPI to decelerate month over month? And how much comfort can we actually get from this? I'm curious to see, particularly given the gasoline increase in prices that we've seen adding to the headline figures. At 1 p.m. yesterday, Tom, you laughed at me when I raised the 10-year auction. The 10-year auction moved markets. Arguably, it was one of the worst auctions for the past year, if not more, of 10-year notes. Why? People don't know. Some people saying because of risk-off kinds of feelings, both within stocks. Some people even blaming crypto. Some people saying that the meltdown in FTX was causing people to liquidate their treasury holdings in order to meet margin calls.
Oh, interesting.
And so there wasn't necessarily the same kind of bid behind the 10-year. So it was really interesting in market moving. Today is 1 p.m. We get the U.S. selling $21 billion of 30-year notes. And I'm curious to see if there's the same kind of risk aversion in this auction as there was yesterday. And today, let's get into the Fed speak. Philadelphia Fed President Patrick Harker, Dallas Fed President Lori Logan, San Francisco Fed President Mary Daly, Cleveland Fed President Loretta Mester, Kansas City Fed President Esther George, among those speakers. What can they actually say, John, given some of the inflation data that we've seen, and given that they're all coming out now post the election, which evidently didn't matter according to the intro? How much do they really indicate that they are ready for a step down at a time when markets are not being overly disrupted by the somewhat hawkish prognostications to date?
They should just start a live blog, Tom. They should just start a live blog.
Actually not a bad idea.
CPI drops and everyone gets their say.
What will be the cumulative voice today of the Fed? Are they going to address cumulative? Remember that?
We'll see. I guess it depends on the data. Joining us now is Michael Pond to talk about the data. The head of global inflation market strategy at Barclays. Good to catch up with you, sir. Can you walk us through, Michael, what you expect a little bit later this morning?
So we're expecting another strong print on CPI, led by the shelter component. Lisa mentioned energy. That's likely to be strong as well, but a little bit less strong than the September reading. So core CPI rose 0.6 in September. We're looking for a 0.4 print. Now, that's still a 5% annualized rate. So that's much stronger than the Fed would like it to be, and we'll keep it on that hawkish mantra.
Michael Pond, you are truly expert at this. What does your x-axis look like? What is the how longedness of 5% inflation?
Well, as you know, Tom, we work in more than 2 dimensions. So it's not just X and Y, it's Z's and M's as well. You know, we got to look at the shelter component. Okay, that's going to drive today's print. The shelter component should be very strong, rising another 0.7, maybe even 0.8 on a month-over-month basis. You know, that's well above the normal rate. What we know, though, is the rental market in real time has slowed quite significantly. The CPI only picks that up with a lag. So, but today we'll get another strong shelter reading. Beyond that, we do expect to see some weakness. Last month, the core commodity reading, so the core goods reading, actually came in fairly soft, rising almost nothing. basically a flat reading. That could continue to come in soft. We're seeing commodities well off their peaks, commodity futures. Shipping rates are down. You mentioned the dollar. While it's flattened out a bit, the dollar is much stronger than it had been. That too should put downward pressure on goods prices. So there's a lot of reasons to expect that core goods prices, especially used cars, could actually be in deflationary territory in the near term. But because of that shelter reading, overall core is likely to remain strong for the next several months at least.
So regardless of what the reading is, Michael, the derivatives of how people trade it are interesting. How are you thinking about how you will use the input of this data to determine a call, to figure out what's valuable and what's not?
That's a very good question. So again, we're looking at the overall reading, but we're diving into the details. If an off consensus print is due to one category that is a big outlier. So last month, for example, we had a 45% month-over-month increase in food at businesses and schools. Okay, that was all because the free lunch that was offered during the pandemic was gone. Okay, so if we get an outlier like that, the market should dismiss it because the Fed isn't really going to care. But if we get a strong shelter reading, what that means, because that tends to trend, is that the next several prints will be strong as well, or at least the market will expect it to be so, and that keeps the Fed on this hiking cycle. We're looking for another 50 basis points in December, as you mentioned at the top of the hour. There's a lot of data yet to be seen. So this downplays a little bit this CPI because we get another one ahead of the mid-December FOMC, as well as another payroll report. But no doubt about it, this is a really important CPI report.
Michael Ponder, Barclays. Michael, thank you. What do I often say? The most important since the last until the next. The next one's not too far away, going into the Federal Reserve.
That's true, John, but I think, to not make fun of it, the cumulative set of data here is important. And one thing I'm noticing in terms of inflation is how much there's stuff on sale right now. All of a sudden, retail's coming in.
Sure.
At the grocery store this weekend, there was more stuff on sale than I've ever seen. And I'm wondering if, Blanchflower was out on Twitter yesterday or this morning, I can't remember, with David Rosenberg saying, look, the disinflation, it's here.
So great, you addressed the story 12 months ago. Now we've got a new problem. And isn't that the shift, really, away from goods and towards services?
Yes.
We're having a different conversation. Yeah. I think that's the problem, but it's shifted. It's shifted in the last 12 months.
Michael Pyle went all spherical geometry on us there with 3 dimensions, blah, blah, blah. But the answer is he went back to real estate. How do we treat real estate at 8:30 this morning? Rent, mortgage. The rest
it's problematic.
I don't know.
You saw what happened with Redfin yesterday. What did they cut? 13% of their staff.
What does Redfin do? Seriously.
Are you serious?
I have no idea.
And they closed their home flipping business. It's an online
Oh, they're the home
brokerage.
flipping, right?
Well, they had one home flipping. They closed that, but they've got other kinds of valuation services.
Yeah.
But from a larger perspective,
he knows this.
Yeah, you think so?
Yeah, absolutely.
Okay. He's like, no, anyway. But I will tell you.
When you flip a home, how long do you own it?
Well, actually, what they normally do is they will offer to buy your home on the spot with an iBuyer, and then but it's for a lower price than you normally would get it. The bigger point that I was trying to make is the Fed speak will be interesting from this perspective after this. What do they do if it's a softer print? Do they back away from the rate hiking calls? And does that leave people thinking that inflation is going to be more entrenched for longer? I mean, talking about the derivatives of how people trade, what potentially will get unleashed at 8:30.
One soft print won't get it done.
No.
That's
another
certainly
one,
the
and another one, and the risk for the Fed is that you get the next print is firmer, and you reset the conversation again going into the Fed.
It's good. It keeps us employed.
Seen that on repeat. Yeah. Futures up 1/4%. You're going to sidetrack us all morning, aren't you? I know you are. Phil Camporelli's going to join us from JP Morgan in the next hour. Looking forward to that. Equities up by 1/4%. One eye on crypto, the other eye on CPI data at 8:30 Eastern Time. 2 hours, 20 minutes away.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Control of the U.S. Senate comes down to 3 races where votes are still being counted. Each party needs to win 2 of those states to secure a majority. Georgia, Arizona, and Nevada are still in play. The race in Georgia is headed to a runoff next month. Neither Democratic incumbent Raphael Warnock nor Republican Herschel Walker received 50% of the vote. Hurricane Nicole came ashore on Florida's East Coast today, the first hurricane to hit the U.S. in November in almost 4 decades.
It's now weakened to a tropical storm. Forecasters warn it could dump up to 8 inches of rain. Bloomberg's learned that crypto exchange FTX.com has told investors that without a bailout, it would need to file for bankruptcy. FTX co-founder Sam Bankman-Fried said the company faced a shortfall of up to $8 billion and needed $4 billion to remain solvent. FTX rival Binance had agreed to buy the company, but walked away after conducting due diligence. Meanwhile, U.S. regulators are investigating. And new Twitter owner Elon Musk has emailed his staff for the first time and warned them of, quote, difficult times ahead. Musk wrote that there's no way to sugarcoat the message about the economic outlook. He also said remote work will no longer be allowed and employees are expected to be in the office for at least 40 hours a week. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Can't seem to get enough of Prada. Loafers, nylon bags, and its Miu Miu micro miniskirt have been flying off the shelves into and onto the arms of young consumers. Fashion tech company Lyst placed Prada second on its fashion index at its highest ever ranking. So what could be making this over a century-year-old fashion house appealing to a new generation of consumers?
What Prada has navigated adeptly is their overall kind of understanding of how cultural conversations are happening online, their ability to partner with various cultural figures.
Gen Z faces are at the front of Prada's advertising to this new market. Maya Hawke, Hunter Schafer, and Sydney Sweeney will be familiar to any fans of Stranger Things or Euphoria. There could be another factor at play, the environment. Of those surveyed by The Lancet, over 59% of Gen Z said that they were extremely worried about the climate crisis. So, for example, the revival of Prada's iconic nylon handbag using eco-friendly materials may be winning kudos among these shoppers. Of course, Prada and Miu Miu are not inexpensive brands, and as the global cost of living crisis hits, these brands might start to feel a pinch. But, for now, Gen Z seem to be reaching for their nylon handbags and not letting go.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority. Markets countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Wall Street prepares for the latest read on inflation.
This is a worldwide crisis. We haven't had inflation like this for 40 years.
The score is inflation one, Fed nothing today.
Will inflation finally begin to slow?
The economy is not responding.
It could get to a terminal rate that's even closer to 6%.
Instant reaction on Bloomberg Surveillance.
People are rethinking some of these inflationary inputs.
I'm on the Brent $100 watch.
Can the bear market rally continue?
Inflation in focus today on Bloomberg.
Our intention is to run again. That's been our intention, regardless of what the outcome of this election was. I think everybody wants me to run, but we're going to have discussions about it. And I don't feel any hurry one way or another.
The President of the United States, live from New York City, the vote's still being counted. Equity futures going into CPI shaping up as follows on the S&P 500. Positive by 1/3 of 1%. Yields unchanged on a 10-year, 4.0981%. Up not even a basis point. And the FX market, euro dollar 99.45. Have you seen the front cover of the New York Post this morning? Trumpty Dumpty.
They've been having fun.
So it's a picture of Donald Trump as Humpty Dumpty. It reads Trumpty Dumpty, and it reads as follows. Don, who couldn't build a wall, had a great fall. Can all the GOP's men put the party back together again? That's the front
Have we
page
heard
this
from
morning.
them yet? I don't think we have we?
We have not.
We've heard
but
like,
the hurricane
rumors,
did hit
speculation.
Florida yesterday.
When I flew back, the Gulf Stream was down, and when I flew back, there was a pilot hitching a ride to try to get to Orlando. It was that bad.
I'm hearing a lot of people call for him to delay the announcement he
Yes.
said to make on November 15th.
Like delay into the Georgia, past the Georgia election.
And the president himself referenced yesterday, I don't know if you watched that news conference, but in that news conference, he talked about if he were to announce that he was going to run, he'd wait until the new year.
Yeah.
So maybe we have to reset things until the new year.
We reset by saying thank you to Anne-Marie Horton, who was beyond generous with her time on our trip to Washington. And we could do a 2-hour conversation this morning, but she doesn't have the time, and either, I guess, do you on an inflation Thursday. Anne-Marie, let me cut to the reality here, and it goes back to the song you seared in our brain from the great Broadway play, South Pacific. Belly High may call you. It is calling world leaders. What will be accomplished in Bali coming up here in the coming days?
Well, the big, really, ticket item for this G20 is, of course, going to be the fact that we are expecting President Biden to sit down with Xi Jinping. And it's an interesting moment because, of course, Xi Jinping is off the heels of this president-breaking term, and he has all these loyalists behind him. And President Biden, though, is going into this meeting much stronger than many would anticipate. And last night he's saying he also plans to run for re-election. But the deliverables is going to be challenging, right? Because this relationship is really straining at the moment, whether it's Taiwan, whether it's chips. That is going to be interesting. But one thing that might start to cool down the temperature a bit between China and the United States is the fact that President Vladimir Putin is not showing up to this G20. So potentially the issue of Ukraine between China and the United States, it will be discussed, but there won't be as much concern around it with President Putin not showing his face.
Even with a Republican House and who knows in the Senate, this is a president who travels, 1,000 miles from Singapore, happy, happy, happy. How does the election change a Biden in Bali?
Well, it's not just Bali, right? His first stop is going to be Sharm el-Sheikh in Egypt. He's going to be talking about climate change. And what we saw from this election is that the youth vote is still incredibly important. Those are individuals who voted for him as well for president. And I think that is going to give his administration a little bit more really, to lean into the climate change talk, even though they're obviously still concerned about higher energy prices. So this puts Biden and his team in a much stronger position to talk about these types of subjects and also meet with adversarial leaders.
With this new, more moderate Congress that we're looking at, the likelihood of in Washington, there is one area that everyone seems to agree on, and it is China. And heading into this meeting with Xi Jinping, what's your sense of how much pressure there is from Congress to not only crack down on some of the trade relationships with China, but U.S. companies that do business in that nation and basically setting parameters for that?
Well, this administration, and as you said, Lisa, it's really a bipartisan topic in Washington, D.C. You'd be hard-pressed to find any politician that does not want to go after China. So there is going to be really a consensus of this administration, I think, speaking for the United States as a whole, going into this meeting. This is why it's going to be very difficult for them to be any big deliverables. The president said last night, a question from our very own Jenny Leonard about China and about this meeting, he said there will be no fundamental concessions. So what can they really come out with? Maybe a joint statement or statements about that they want to see peace on the European continent, maybe something about climate change and how they're still going to put those negotiations back on the table. Because remember, when the House Speaker Pelosi went over to Taiwan, China ripped the carpet under the United States when it came to climate talks and also some military talks. And now we have Kevin McCarthy, who's poised to be the new speaker, also telling reporters that he would love to lead a delegation there. So there's not really much that can come out of it because of where the relationship is right now.
How difficult is it for this administration to take a leadership role in climate change when they're trying to also send a message that they're not opposed to the fossil fuel industry?
It's been incredibly challenging. They've wanted to call these assets stranded assets. President Biden campaigned on the fact that he wants to get rid of fossil fuels. He wants to be a climate president. At the same time, he also cannot have gasoline prices north of $5 a gallon, which is what we saw in June, which is when we saw his polls really precipitously drop. This is something that is very difficult for this administration to square because they really want to lean into the renewable story and the transition. But at the same time, they recognize they need these fossil fuels, and they need them now more than ever because after this G20, December 5th is a key date to watch. If this oil price cap is not done, it could potentially be challenging for buyers to buy Russian crude, and we can see shut-ins. And if COVID starts to ease up in China, we are going to see crude prices spike.
Yeah. AMH down in Washington, tremendous work over the last couple of days, as always. Anne-Marie, thank you. So there are two potential bilaterals on the table next week. The obvious one is between the President of the United States and the Chinese leader. Tom, that's the obvious one. The interesting one from my perspective is actually whether he meets Chancellor Scholz or not. I think that Scholz going to Beijing was controversial.
Yes.
The Europeans very recently have been complaining about the so-called Inflation Reduction Act. The IRA, of course, is something else. For the Europeans, it's about state aid. And I wonder what that's going to look like in the coming weeks and months. The tension potentially between the Europeans and the Americans.
The other foreign policy to watch is the foreign policy, as you mentioned, with Mr. Trump in the New York Post, the foreign policy discussions within the Republican Party and the foreign policy discussions post-election within the Democratic Party. What kind of tone can Biden set with the Democrats to say, hey, we got this right? Where did we get it wrong? That introspection there as well.
I didn't hear that in the news conference yesterday.
I did not hear that in the news conference, no.
I didn't hear that yesterday.
There's an article in the New York Times today, young reporter Nicholas Fondos. It is brilliant on what the Democrats got wrong on crime. Brilliant.
Hochul just kind of got over the finish line and the rest didn't, right?
I think it's complex here. And of course, am I right? We wait for December. Do we have a date in December for Georgia?
I think it is the 6th.
Yeah, 6th.
It's the 6th. That's the date.
Election's not over.
Not yet.
We can say we're election central.
From New York, this is Bloomberg.
ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself, self-made day trader. Yes. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, our fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.